It wasn't long ago that catching a ride like this, or accessing every single song in the world like this, or even connecting to your home like this,
Hello.
seemed unimaginable. Kind of like having the cloud experience outside the public cloud. But that experience is here, across all your apps and data, wherever they live, as a service.
We were the first to say the world will be hybrid, and it is.
Just as streaming brought the theater to you, and online shopping brought the entire store to you, HPE is bringing the entire cloud experience to you.
Cloud is not a destination, it is an experience.
Apps and data unified. Clouds, edges, data centers unified. This is more agility, instant insights, faster innovation, data gravity defied. All in one place, one single line of sight, one consistent experience. One direct route to a better next, and the vision to take you further. This is the cloud experience everywhere. This is HPE.
The world around us is changing. Amid this change, we are here for you, helping you find, design, manage, and invest in amazing spaces. We are JLL, the real estate experts.
Your host for the day, and I welcome you all to Mint Startup Icon Awards 2022. Let's start this day with some energy, everyone. Come on, can we have a huge round of applause? Thank you. Thank you for taking time out and gracing our event with your presence. This is our debut edition of Mint Startup Icon, and it is aimed at providing an opportunity to all the startups to augment their innovations amongst investor communities. Being the world's 6th biggest economy, India has the 3rd largest startup ecosystem in the world. It is minting startup unicorns at a record pace. 2021 has been recognized as the year of unicorns, with over 40 unicorns added last year. It has also witnessed more than 2,250 startups, which is over 600 more than 2020. Innovation is forging the future. But 2022 demands a little different path to light. Innovation that not just fix the business, but also upend convention and craft a new vision for the future. The commitment is to develop a culture of innovation and entrepreneurship in every nook and corner of India. This, ladies and gentlemen, is the new era of entrepreneurship. The startup wave in India is getting stronger by the day, and government policies and initiatives are making a colossal difference in giving them a boost. In between this, Mint Startup Icon is bridging the gap between the startups as well as some of the brightest minds of the industries and investors. Today, we all are gathered here to reward, applaud, and celebrate the new age innovation. This day will unfold with a keynote session by some of our very distinguished speakers, followed by a multitude of nuanced discussions on the road lying ahead for startups, opportunities available, policy initiatives by the government, and how to mitigate the challenges in the new normal world. A major chunk of thanks for facilitating us in organizing this summit goes to our partners for their valuable support and contribution, and entrusting us in our initiative to recognize the extraordinary talent and innovation of startups. We would sincerely like to thank our partners, Hewlett-Packard Enterprise and Intel. Hewlett-Packard Enterprise is the global edge-to-cloud company built to transform the businesses. It helps you harness the right experience, expertise, and economics to solve the most pressing IT challenges and figure out what's next for your evolving businesses. Well, we are immensely grateful for this valuable association. Thank you so much, HPE. We would also like to thank our knowledge partner, Boston Consulting Group. BCG is one of the largest and prestigious consulting firms that delivers solutions through leading-edge management consulting, technology and design, and corporate and digital ventures. We absolutely cherish this wonderful association. Thank you so much, BCG. And a special thanks to JLL, our real estate expert partner. JLL is India's premier and largest professional services firm specializing in real estate. The firm provides investors, developers, local corporates, and multinational companies with a comprehensive range of services. These include leasing, capital markets, research and advisory, transaction management, project development, facility management, and property and asset management. Thank you so much, JLL. Well, ladies and gentlemen, in this era of digital revolution, where you and I and the entire world is connected via social media, I have a very special announcement to make here that you may now tweet live with us and you may tag us at LiveMint and at Tech Circle India. You may also use the hashtag MintStartupIcon2022. Now, to kickstart this day and to deliver the welcome address, I may now like to invite a very accomplished gentleman, Mr. Leslie De Monte, Executive Editor, VC Circle. Let's welcome him with a huge round of applause, everyone.
Can you hear me? Lovely. So good afternoon, friends. It gives me immense pleasure to welcome all of you on behalf of Mint to the first edition of the Mint Startup Icons Awards. While the pandemic has clearly disrupted our lives, it has also thrown up a lovely opportunity out here in the form of accelerated tech adoption by so many companies. And this also explains why thousands of investors have invested billions of dollars into startups. Indeed, startups have grown remarkably over the last 6 years. So if you look at some of the government data, I think it's not only in big cities, but you also have them in districts. Something like 555 districts have about at least one startup. And that figure in 2016-17 was just I think 121 districts had about one startup. So you see that it's leapfrogging out there. It's obvious that the startup ecosystem as such is thriving on the back of government initiatives. As of today, I think more than 26 states in India have a startup policy. Besides, there's an increasing number of accelerators, incubators, Ps and VCs that are supporting. And of course, startups have a lot of support now from mainstream newspapers, Mint being one of them, which also explains in part why we are organizing this event and this awards function. Now, all the support has clearly, as many of the speakers will tell you throughout the day, has made India the third largest startup ecosystem in the world. The more than 80 unicorns, I think it's something like 88, some people say 84, some people say 88, 42 or 44 unicorns in 2021 alone. And these are all startups that have a valuation of $1 billion and more. And then, of course, we also have 25 Sunicorns or so, which are the startups that are valued at $500 million and more, a little below $1 billion. This is, of course, not to mention any decacorn. Of course, we do not have the hectacorns. But there are a lot of minicons, hundreds of them, which all the investors like you are showing confidence and pumping in money. There's a lot more to come. In just the last 3 months or so of 2022, I mean, March has not even ended, so January, February, and March, we've already had about 13 unicorns, and they have cumulatively raised about $3 billion, something like 2.97, if I'm not mistaken. Now that is a pretty interesting scenario because by 2025, the Indian startups ecosystem, I think it's projected to have something like 180 to 200 unicorns. And the tech startups themselves, I think what we had something, current the figures around 10,000, that is going to projected to shoot up to about 37,000. So this is, and I think cumulatively we are talking about them having a valuation of $600 to $700 billion. Now this is not an unachievable target. It may sound a little high, the projections, but if you realize that Ps and VCs in 2021 have already invested, I think, $70 billion or so. So clearly investors have clearly cemented their conviction in India's entrepreneurs. The tech sector, if you just look at the tech sector alone, they have thrown up so many unicorns out there. And last year they notched about $16.3 billion. This is numbers published by IVCA and EY. This was followed by the e-commerce, $15.9 billion. And you had the e-commerce sector, I think e-commerce sector is $15.9 billion. And tech and e-commerce accounted for 42% of all investments in 2021. Now, VC investment activity in 2021 was dominated by three sectors. Of course, you had clearly the ones, the usual suspects, technology, e-commerce, and financial services. These three sectors recorded over $10 billion in investments and more than 150 deals. In total, there were 14 sectors that received over $1 billion. So you see that it was equally spread across all sectors. And this data is again by EY analysis of VCCH data. Now, one major factor that we have seen from a media point of view that is attracting VC investors to technology is the improvement of scalability and the profitability metrics that have shot up due to the emergence of software as a service companies, cloud storage, and accelerated adoption of digital technologies. Now, technology is increasingly, as we all will know and all will continue to reiterate throughout the day, is not just an enabler to businesses, but it's forming a part of the critical infrastructure. Clearly, the good part is that the startup sector has also created a lot of jobs. So I think it's around 5 lakh jobs already. We know them as gig workers. And this is very similar, if you recollect, to how the Indian IT companies started out, whether you had the TCS, Infosys, HCL Technologies, Wipro, Tech Mahindra, who grew up almost in kind of garages, and now today they are almost a $200 billion kind of industry out there. We hope that the startup sector will easily surpass that. And if you know the media well, we always look at the rosy picture with a critical lens. So we seek a fly in the ointment, not in this particular case though. But clearly there are some chinks in the startup armor and they are beginning to show up. So first, valuations are under scanner. Yes, we are seeing that all the new age companies that are getting listed on the bourses, many of their valuations have almost halved. Losses are another sore point. So we have seen that because they do not have shown a lot of cash burn, their profits are under questions. So these are kind of small chinks in the armor that we are seeing. And third, I think a very important point that we will be raising up in another fireside also here is that the startup sector, like most sectors in India, needs to do a lot more for gender diversity at the board levels too. But despite these limitations as such, investors still appear to believe in the long-term growth of the sector and, of course, in innovation. Now, this confidence can also be seen from the fact that investors are willing to pump in money in the so-called Web 3.0 and metaverse startups that deal with blockchain, cryptocurrencies, non-fungible tokens, etc. Throughout the day, eminent speakers, including Mr. Amitabh Kant, whom I can see is already here. He's the CEO of Niti Aayog. And all of them will keep on reiterating, they'll show up a lot of data points. But more importantly, they will provide us with a lot of deep insights and perspectives and how we should look at the data in the context of startups. And that's the need of the hour. Of course, if you're still wondering why we are calling this event Mint Startup Icon and not some other name, then it's very clear that innovation in India is not just limited to specific sectors, it's across all sectors. In fact, we have recognized startups across 56 diverse industrial sectors. And we strongly believe that these new leaders are the icons and the new unicorns. Of course, you will hear a lot more during the day about this and when you join us this evening for the awards function. For now, I once again invite and extend all of you a very hearty welcome to this awards function and the event. All our editors will be more than happy to engage with you throughout the day. So please have fun. Thank you.
Thank you so much, Mr. Leslie, for giving us a wonderful start for this day with your very insightful words. On that note, ladies and gentlemen, we will move further to our opening keynote address. Our keynote speaker today is Mr. Amitabh Kant, a relentless champion of startups and entrepreneurs. The CEO of the government's think tank, Niti Aayog, Mr. Kant has been a key driver behind a number of important government initiatives. These initiatives span the socio-economic spectrum. From the Aspirational Districts Initiative to the government's push in renewables and electric vehicles, Mr. Kant's progressive ideas find their imprint in schemes we all are familiar with. Campaigns like Make in India, Startup India, Incredible India, and the evergreen God's Own Country have all had Mr. Kant's signature vision, energy, and drive. We couldn't have had a more apt speaker to open the Mint Icon Startup Awards. So ladies and gentlemen, please join me in welcoming Mr. Amitabh Kant.
Thank you very much for that kind introduction. I'm truly delighted to be here, and let me first compliment Mint for this wonderful initiative of Startup Icon Awards 2022, and really giving a major impetus to the startup movement in India, which is greatly required. You know, when we started the Startup India initiative around 2016, we'd never envisaged that it'll gain this kind of a momentum. And at that point of time, I had to really go around chasing startups to collect them, to really work out a program and get the Prime Minister to launch it. But since then, the Startup India movement has gained such a tremendous movement, and it's been such a phenomenal story, because the last few years have been phenomenal in how the Indian startup system has actually matured, and it's not merely matured, but it's grown by leaps and bounds in the last few years. In 2016, there were just a handful of startups. There was very limited support available in terms of investments, in terms of incubators, in terms of accelerators. And the landscape was very, very different at that point of time. Actually, you know, we had to get a lot of international people at that time. I still remember Travis, who started, who had launched Uber. Then we got Masha Son, and then we got many other people to actually come and inspire many Indian startups at that point of time. And since then, I'm truly delighted that we've emerged as one of the most dynamic and one of the most vibrant ecosystems in the world. We have grown to become, actually, to my mind, many people say the third largest, but I truly believe that we are the second largest ecosystem in the world today. As on date, we have over about close to 67,000 startups which are officially recognized by the Department of Industrial Promotion and Industries. We had introduced the system of recognition, so there are about 67,000 startups in India now. And this has been a truly tremendous journey, because concerted efforts have been made to actually provide all the institutional support, and that has been really critical in laying the foundation of this ecosystem that has been built over the years. If you look at it from the institutional perspective, the first definitive measure that was taken at the launch of the Startup India movement was that when we launched it, it was difficult to fathom that, you know, what we need to do. So we started looking at and we interacted with a number of investors. We, interacted with a number of startups at that point of time. And I think the key measures that were then suggested by the stakeholders was that we need to streamline the processes for assisting startups. There was no such system as how to define a startup. What is a startup? Even the definition was not clear. So we laid out the definition and the registration process. And then made it very, very simple so that you can register online. We also said that for the first 3 years, that there will be tax exemption for the 3 years. It's very easy to meet the compliance requirement through app-based self-certification measures. We said that all labor laws you can register online and you'll be exempted from any paperwork. We have opened up many other opportunities for startups. They're eligible for participating in government tenders and are exempt from various requirements because the important thing was to create a market from them. Setting up of a fund of funds and incubation program. We reduced the patent filing costs, but more important than that was to create the ecosystem. We rolled out the insolvency and bankruptcy code to ensure a 90-day window for winding up of any startup. We started the Atal Innovation Mission in Niti Aayog so that we could support a large number of tinkering labs in schools. So today we've supported about 10,500 tinkering labs at the school level. And students from class 6 onwards actually deal with 3D printers, robots, artificial intelligence from class 6 onwards. And therefore, what we've done is really lay the foundation for a long-term innovative India. Then we've supported over 100 incubators from Atal Innovation Mission. And, as India cements its position in the global startup landscape, this would not have been possible without the enabling role of the digital infrastructure, which has been very meticulously and systematically rolled out in India. And to my mind, this digital infrastructure has been very, very critical in doing this. If you look at the lowest cost of data plans in the world are in India. That has enabled a very high level of penetration of smartphone devices. India has more users than ever before here. We are adding an internet user every 3 minutes. If you look at the data which is available, we have the highest number of internet users. And digital connectivity has actually given a massive amount of fillip to the Startup India movement in India. So it's not merely been the powerful jam trinity that everybody has a bank account, everybody has a mobile phone, everybody has, many years back when I was working in Kerala and I was working with the traditional fisheries sector, my job was to transform the lives of traditional fishermen. So we could, and fishermen then used to get only about 20 paisa out of a rupee, 20% out of the fish catch. So we were able to provide fishing nets, new crafts, new outboard motors which enable them to go much further into the sea. But opening a bank account was a nightmare. It used to take me 9 months, 10 months to open a bank account for a traditional fisherman or a fisherwoman. But as a result of the powerful jam trinity of Jan-Dhan bank accounts, the biometric Aadhaar cards, and hundreds and millions of mobile phones, every household now has access to formal banking services along with a platform for availing low-value credit, insurance, and pension schemes. So India's stack, with its APIs, such as Aadhaar authentication, eKYC, eSign, UPI, has all allowed governments, businesses, startups and developers to utilize the public digital infrastructure to offer a vast range of financial services, and this has really catapulted the behavior of cashless transactions. So if you look at the unified payment interface, for instance, the digital UPI payment has become a way of life for millions, and 80% of transactions in UPI are actually peer-to-peer, and that reflects in a major way the replacement of cash in India. So the platform approach which we have taken, the platform approach adopted in conceptualizing UPI actually has resulted in very top-class payment products being developed on top of UPI. So, actually the focus, from just payments, the focus then shifted to lending. And with payments problems solved, on top of UPI, you had Paytm, PhonePe, Google Pay, Apple Pay, everyone. And then with payments problems solved, the focus then shifted towards lending on both consumer and MSME-based lending. And Fintech has allowed innovation, allowing completely new models to come up, such as flow-based lending. And if you look at a vast number of startups, leading startups in this space, whether it's Lending Cart, whether it's Pine Labs, whether it's MobiKwik, all lending on the basis of this. And after having moved on from lending, there was a movement towards personal finance. So with sufficient comfort with payments and lending, there is increased focus towards personal finance, money management, investments, and trading. And a plethora of really top-class startups have come up in this space. So you look at Zerodha, you look at Grow, you look at Upstock. They have all created an ecosystem of modern investment apps. Really top-class, and all of them are world-class in many ways. And then there is a targeting complex segment. What we are now witnessing is really the emergence of financial products which target the more complex, segments. For instance, the new insurance tech companies. You look at Digit, you look at Acco. These are startups which are greatly simplifying insurance. They are covering end-to-end cycle of origination, underwriting claims and selection. And all this has been supplemented by the platform approach taken by India. And the fintech ecosystem actually is, to my mind, is really poised to leapfrog as it caters to aspirations of the 1.3 billion plus Indians. And this has all been possible because we've adopted a very public-private partnership approach in this. The private sector has used the platforms created by government to grow and expand. And this, to my mind, is really the key difference between India and the rest of the world. That using the public platform approach, whether it's Jam Trinity, whether it's UPI, and if you look at the CoWIN platform, India is the only country which during the COVID used the CoWIN platform, totally digitalized it. Nowhere in the world has this happened, not even USA, not even UK, anywhere else. The entire process of vaccination has been digital. And as we move now towards the digital health identity for every Indian, you'll have a unique platform on the back of which many of you will actually innovate, many of you will do very unique things. And therefore, to my mind, all this, we'll be creating new ways to solve health challenges in the country, and we will see the eKYC, which will be leveraged by startups to reduce the waiting time for authenticating information from years and months to minutes. Less than a minute you can open a bank account, and that has enabled a huge paradigm shift, to my mind. This has been spectacular in many, many ways. There are a huge number of government programs and support initiatives. It's not merely the fund of funds, the incubation centers and the funds which are serving as a nucleus for growing new ideas. And it really helps that India is a hub of talent, of very highly skilled technical professionals, many of whom are sitting here, and many more young graduates from STEM backgrounds end up taking opportunities with startups instead of seeking jobs outside or with established industry lead. So, you know, the Indian startup movement has a very unique energy, vibrancy, and dynamism, and that energy and vibrancy you will not find in any of the established players, not even Google, not even Microsoft. That's a very different energy which the young startup movement of India will find. And therefore, my view is that it's at the end of the day, it's the startup founders, their dynamic teams who are the real change makers. They are the ones driving the startup revolution. And in addition to that, there are many of the VC funds, many of the family funders, many of Indian has been able to create this unique movement of Indians supporting and financing this. And Indian startups actually are disrupting way ahead of the industry. They are seizing opportunities and they're shaking up the status quo and innovating across sectors, whether it's health, whether it's manufacturing, whether it's education, whether it's financial inclusion, now transport and logistics, all these, and in future will be the sustainability of agriculture. So as we move from one sector to another sector, it's actually all the disruption that is happening across by young startups. And actually, I find it quite amazing to see the innovation that is taking place in the Indian ecosystem, because the number of domestic patents registration has shot up enormously. It just used to be about 12,000 in 2015-16. It's gone up to about 25,000 in 2020 and 21. So you've seen a massive growth in this. And it just goes to show that actually innovation has grown massively. And this has actually led to a completely new and phenomenal ecosystem that in 2020, we have over about close to 90 unicorns, and during the COVID period, we had about 44 unicorns. And this year, in the last 3 months, we've been able to create over 11 unicorns. So actually, we are creating 3 to 4 unicorns every month. And what is happening is that these unicorns are actually solving many of the challenges of India. And our challenges are very unique. These are challenges of health, these are challenges of education, these are challenges of agriculture. And for them, the market is not the 1.3 billion people of India. As you solve these problems, you are actually finding a market for the next 5 to 6 billion people of the world who will move from poverty to middle class. And that, to my mind, is really a phenomenal thing, that the market will grow and expand for all of you. I deal with a lot of established companies. I also interact with a number of startups, and let me tell you that the energy level of the startups is 10x more than any established company. And actually, many of these established companies can survive and flourish only if they ensure that they also have a startup culture within their companies. So the other big thing that I'm seeing is that the hard work that the startup teams have been putting in is really enormous. They have ideas, they are able to raise resources, they are able to put in all the hard work, come up with completely new innovative ideas, and therefore many of them are succeeding. So I really think that my personal view is that I'm very confident that the Indian startup ecosystem can step up to any challenge that India has today. And actually, if you want to solve many of the problems, we should unleash many more startups in those areas. They are the ones who will find tech solutions to all these issues. So I really feel that this is a very unique initiative by Mint, the Startup Icon Awards. I want to compliment Mint on this, because the more you award iconic startups, the better it is. That will provide a huge momentum to them. And we from Government of India are always here to support and create the right ecosystem so that startups keep disrupting India. The only way to accelerate the pace of growth, the only way to find jobs, the only way to get into new areas of growth, and the only way to accelerate progress. And, actually the only way you will get into sunrise areas of growth, whether it be battery manufacturing, whether it be solar energy, whether it be electric vehicles, all these are cutting edge areas of growth. Quite often in India, we get into the sunset areas of growth, and then by that time, the rest of the world is already overtaken. It's very difficult to penetrate global markets then. But the sunrise areas of growth are very critical. Some of them we are supporting through the PLI movement, the production-linked incentive. And I'm quite sure that startups will get into many of these new emerging areas of growth and make India a global champion in all these areas of growth. I really wish the Startup Iconic movement all success. I want to compliment Mint, and I want to compliment all the award winners who've achieved awards, and I wish this movement all success, and I wish Mint all success in this. And I really want to compliment all the award winners who are going to receive awards today. Thank you very much. My heartiest congratulations.
Thank you so much, Mr. Khan, for your very inspirational words and shedding the light on the policy initiatives by the government. Well, once again, I would like to remind all the delegates that they may tweet with us live using the hashtag MintStartupIcon2022, and you can tag us at LiveMint and at Tech Circle India. With this, we will take this day ahead to our next keynote address, and for the same, our speaker would be Mr. Shalil Gupta, CBO, Mosaic Digital. Mr. Shalil Gupta is the business head for Mosaic Digital and HT Media Company. He is currently leading key businesses like the events and training business, research and research products like VCC Edge, Sales Edge, and Partner Edge, and integrated marketing solutions. Prior to this role, Mr. Shalil was AVP Research and Consulting at IDC India, and he's a prominent spokesperson for most Mint and Mosaic Digital events. Let's welcome Mr. Shalil Gupta on the stage.
Very much. Thanks a lot. Is this working? Okay. So after this energetic speech from Amitabh Kant, I have to match up to him, and it seems to be the impossible challenge at my hand, guys. So I'm going to start with something like, very good afternoon to all of you. I can only see 3-4 good afternoons. That means the lunch was fabulous. Okay, one more time. Very good afternoon to everybody. This side was very, very good. This was lazy people, let me tell you, right? So once again, guys, last time, very good afternoon to everybody. Back. I have to match up Amitabh Kant's energy, guys. So while I was doing the analysis for the whole startup icon perspective, and I think the first question which came into my mind was, what creates the icon? Why startups get to an icon position? What is happening in the ecosystem which is building more and more icons for us? And that actually drove my presentation today, which shouldering the innovation agenda of the nation, actually. That's how we are trying to build it. India is all set to become the startup hub of the world. As Amitabh already said to us, we are looking at more than 60,000 startups in the country today. Almost 68,000 startups in the country today. But more important point is, out of which 40,000 are tech-led startups. Technology is playing such an important role today. 12% of those startups are actually deep technology. We are almost talking about the Web 3.0, artificial intelligence, machine learning, and now we are talking about metaverse. I yet to see the metaverse, but I think we are all talking about metaverse now. Someday we will be probably in the conference room in the metaverse perspective. 89 unicorns. I mean, this is like more than $200 billion of market value which is being created by the unicorns. You know what is the IT outsourcing market size today? Anybody? Any guesses? In India, IT outsourcing market size? Any guesses, guys? This side? I think we have an IT services champion. Jaideep, IT outsourcing This is how I take attention from people. IT outsourcing market size in India. Yeah. Probably nearby. No. I'm talking about the IT outsourcing from a global perspective. True, and it took 2 decades, almost more than 2 decades, for an IT outsourcing in India to be $200 billion. It is not even now 5 years old where we have more than 200 billion market value created by unicorns actually. Just the unicorns. This is how fast it's happening. We have 750 active institutional investors there. We are looking at what is the CAGR growth if you have invested into a startup. Now, this is the best question. Anybody? Back? Wild guess? Last 10 years, cumulative growth if you have invested into startups. Sorry? No, that's cumulatively 10 years. 39%. This is the best asset category created so far in the country. CAGR of 39% in a decade. There is no asset class today in the country who can give you such kind of returns. These are assured returns, by the way. If you look at the ecosystem today, on the y-axis you look at the share of those startups and the CAGR growth. Largely you will find more than 50% of the startups are contributed by enterprise tech, 12%, BFSI 8%, and Edtech 13%. Growing is retail tech and health tech. That's the top quadrant, how they're growing it. Important point is there are immense opportunities being created by nascent ones. So you look at the growth targets, travel and hospitality, automotive, industrial manufacturing, just picking up. If I'm an investor, I will be looking at investing into both sides of the rectangles, the top one and the below one. This is high growth trajectory there, potentially going very fast in India going forward. And then we have another ones coming up. Now this chart actually shows that it's not just one sector. It is not one vertical. This is micro verticals where startups are now playing an important role. They get into the process orientation. They get into the organization behaviors and trying to nudge them and build and change for them. Therefore, how we create the icons and what are the principles to create those icons, guys. So we say principles of zeros. I mean, this is a country renowned for being created zeros. We created zero, right? So any guesses why zero is so important for startups now? And why have you been an icon of the countries today? Sorry? You started at zero, wow, that's again. How do you take it to next level? Any? Sorry? Yep, investors, I mean, you go and raise capital, more the zeros, the more the value for you. Absolutely, absolutely correct. But there are 5 principles of zeros which you people created in the ecosystem today. If you really see these zeros actually, I was talking about first one is people and leadership. And that's where we saw you people talking to us and saying to us that zero wiggle room for talent. You go all hog on talent. You make sure the talent is with you guys. There are traditional companies, there are CEOs where I have been interacting with. I personally, myself, is actually struggling to get the talent into my organization. And wherever I go, the talent is with the startups. You have zero room to compromise with the talent. You pick the talent from the market like this. If you want to be an icon, pick the talent. The second part is operations. And you know, most of the time we have used to learn from Toyota manufacturing system, Kanban systems, and all of that. You people have failed that. Today, Toyota manufacturing system should come to India and learn from you guys. Why? You have zero wait time for delivery, guys. Whether you are into a B2B business or a B2C business, the whole intention of you people moving into the market is zero wait time. That's called operations for you. That's how you are intending to build your businesses. No other traditional companies is think even closer to that. Third part, zero tolerance. You have actually taken the bandwagon of ESG, contributing to the society, back to the economy, back to the environment. You are the first one to adopt to that and actually claim it back into the ecosystem and society. Zero tolerance, you people have built it. And that's to look forward. The generations will look forward for you guys. They will be looking at, these are my people who have actually built, and I would like to get mentored from them. Not the traditional people or the traditional organizations. Ecosystem, zero difference in channels. Any channel you go now, whether digital channel or a physical channel, you will create that omni-channel experience across the board. Any type of customer sitting anywhere can actually consume your products across all channels. So it is a zero difference of channels you brought in. There are monstrous dinosaurs, retailers who are looking at creating omni-channel experience. You start with omni-channel experience. That's how you created it. Technology, it's a zero desire of assistance. It's amazing to see these zeros, right? You people haven't yourself realized it, that how fast you created such big zeros. The more zeros you are going to create, guys, believe me, the investors in the room are going to give you more zeros forward. This is the principles of zeros. These are 5 principles of the zeros. And all of this has been created on the digital infrastructure of India. And this infrastructure is not the connectivity which we have. This is about Aadhaar infrastructure, UPI infrastructure, payments infrastructure. This is about corporates getting basically strategic alliance with the startups today. That's the digital infrastructure we are talking. When we look at CEO's desk, actually, it's very important today. Really 4 points to remember. One, most of the CEOs said, I am not interested in revenue and market share. That means the short-term goals and short-term thinking is out of the window. Most of the CEOs are saying that I am now building and transforming my organization for a longer period of time. So I really need a transformation agenda at my end rather than, I call it a quarter-to-quarter movement. That quarter is in the evening. Don't worry about that. But this quarter is a very different quarter we are talking. So demand revival with aggressive GTMs, the new approaches in the market being defined, and restoring the customer trust, especially after the post-pandemic era we are looking at it. So what's the new operating model looks like? And the gentleman here actually sitting with me is Jaydeep. We both actually built this model. We were analyzing what is the difference in the market going forward. Why are such people, some of the people are very successful as startup icons, and why some people are not so successful? And we then realized there are 3 vertices. Businesses were operating through technology, industry, and process. Pretty much, if you want to go and buy something today, you will say, do you know the technology, do you know the process, and do you know the industry? If the 3 tick marks are there, you probably are okay. But then comes the startups. These are the icons which you're sitting in this room today. What happened, what they thought about very nicely is the intersection of these vertices. So the technology and industry, when they intersect today, that's called platforms. And we commonly use platform as a word across the board. What do? I have a Healthtech platform. I have an Edtech platform. I have a Fintech platform. But how is the platform created? It's the technology and the industry intersection. Only when you intersect that, you will directly intersect between technology and process. Because until you move into the process, value is not created. You will not be able to create the value for the organization. That's the innovation you have done. And you keep on doing this innovation in automation and configuration form. Believe me, guys, what you have done so far and why you are so icons of the country today is because you have created a new industry operating model. So if you have to start thinking or regenerating yourself to the next level of innovation, don't do anything else. Just look at the midpoints of the new triangle. Look at creating and enhancing the platforms. Keep on doing that, creating business values and innovations, and make sure that it is automated and configured. You will create new industry operating models. Many organizations who would be awarded in the evening today, you will find this fits into their agenda. That's what they have been doing so far. Just to tell you, in 2021, we have $38.4 billion of IT spend happening in the country today. And in 2022, in 1 year, we would be adding almost $6.5 billion of IT spend. That's how the technology acceleration is going to happen today. But where are the organization and how the organization operating? So we as a company is tracking almost now 86,000 companies. So if you're looking at your GTM, you have to look at it very differently. There are 67% of the spend is happening by only 3% of the companies. So that's really the area we're looking at it. Look at orchestration. These are the companies who are ranging from 500 crore to 100, 200 crore, and there are only 11,000 companies there. But what happens to digital? You're looking at almost 9% of the market share there, with 5,500 companies there. So you have shifted the needle from being orchestrating layer or a huge, large organization layer to a digital part and operated in a different way. Today, what you are called is called digital native companies. You created, as icon of the company, as a new segment in the market. Today, I'm talking to the market. They don't refer you as a company. They refer you as a digital native companies. They refer you as a new segment in the market today. So you were able to successfully build that segment for the country, and very proud to say that. So what was the journey going about? I think that the last part is very important for all of us. You did very successfully identify the lead, the latent need, and the trigger. Then you went to the possible partners. Where is my customers looking at fulfilling this agenda today? Then you went to comparisons and said, okay, fine, which are the areas of comparisons you're looking at? All of you people in the startup perspective have gone through this journey today. Whether you know about this journey or not, but I'm just relaying it back to you, you will realize that this is a journey you actually played it very important. Then you went to the consideration set, and you identified some of the gaps which you are fulfilling. Then you went to the customers and said, hey, customers, we have got a proposition to sell, we fulfill your gap, and you please buy. And suddenly there are people who are judging you now. You're on the other side of the table. You have a customer who's consuming you, adopting you, in fact, into their environment. They're using you, whether you're a B2C or a B2B company. But often you haven't heard, right? I mean, I used Flipkart, experience was bad. Or an experience was extraordinarily good. But you judge. This is not the right time, because the experience gets created over the period of time. So you started working on creating customer experiences, and that's really become the central agenda for most of the icons, most of the startups today. How do I create that convenience? How do I create that experience for my customers today? Once you started driving in those tracks, you started making reorders. You started making it very easy for your customers to come and reorder. So when we say reorder, I'm actually telling you become very intelligent. You started understanding your customers and their behaviors actually. Once you started understanding your customers and behaviors, you slowly went across and created huge amount of advocacy for you. These are advocates. Your customers are now telling other customers, please go and take and use this platform. That's word of mouth. That's the best kind of marketing I've ever seen in the life, let me tell you. And went to the self-service. You automated so much that today, any traditional company would be putting X number of resources, and you would be X by 10 and delivering better products at a better speed and a better experience. If I look at from all of this perspective, why are you really winning? Because of these statistics. You suddenly get a win rate of 5 to 10% extra edge from any other company. You suddenly create new share by 5 to 10%. Your customer experience increased by 10 to 20%. Your churn goes down by 10 to 15% over the period of this cycle if you look at it. And your self-service cost goes down 10 to 20%. Every data point tells me one thing. You are almost 25 to 30% edge with any other competitor in the market. 25 to 30% of the edge. Keep this edge with you guys. This is the best you can have it. And maybe increase the gap with your competition much higher and higher. The last part, where I leave you behind. You're not operating into efficiencies. You're not operating into replacement businesses. And many a times we get confused. You know, we should build an efficiency business. Most of the icons are operating on non-consumption, which means yet to find a solution of your product somewhere else. You are into a non-consumption zone. The more you push higher on a non-consumption zone, guys, let me bet you, the better you will be. And you will be the icon of the country. With this, I rest my case with the two girls on the laptop. Thank you very much.
Thank you so much, Mr. Shalil. I must tell you that it's been a really interactive session. Thank you so much for that. Well, without any further ado, we will quickly move to our first panel discussion of the day. And we have a very interesting factoid coming our way. So could we have the factoid on the screen, please? Wow, well, this seems like that this is going to be a very interesting topic of the discussion. And our topic would be global expansion, a wild goose chase, or up for grabs. Meanwhile, we are setting the stage here. Once again, I would like to put forth that the most powerful medium to disseminate the information is the social media. So I would like to see the hands here of those people who are tweeting live with us here. Can I see the hands? One hand. What are the people sitting over here? Okay. I may remind you once again that you may now tweet live with us. You may tag us at LiveMint and at Tech Circle India, and you can use the hashtag MintStartupIcon2022. On that note, we will quickly move to our first panel discussion. Well, globalizing startups could be a roller coaster ride. So let's find out when and how should one be riding this roller coaster. So I will leave it to our expert panelists to discuss. For the same, we would invite our panelist and the moderator on the stage. Our panelists would be, I would request you to kindly put your hands together as I call them on the stage. Ms. Padmaja Ruparel, co-founder, Indian Angel Network. Mr. Gautam Kapoor, co-founder, ShipRocket. Ms. Bhavna Agrawal, country head, strategy and growth, Hewlett-Packard Enterprise. And our moderator for the same would be Mr. Jaydeep Mehta, CEO, Mosaic Digital and head Mint. Let's welcome all of them with a huge round of applause, everyone. Over to the moderator now.
Hello, hello. Hi, good afternoon, everyone. Welcome to my panelists. It's wonderful to be here this afternoon and moderating this power panel. You just saw a factoid, you know, about more than 40% of you folks want to go international in year one. Now, you juxtapose that with some of the data that Salil put up. 39% CAGR in your own revenues, mostly from the India market historically. The India IT ecosystem growing so rapidly, digital spending growing rapidly, consumers embracing the internet from an e-commerce perspective rapidly. So it does open up a debate, and that's what we're going to be chatting about today, about why do we need to go global, and when's the right time to go global? Should we go global in year one? Should we wait for some time? What does it take to go global as well? And I've got an absolutely fantastic panel, because what I've got with me, and it's always easier to moderate when there's such lovely panelists here, bringing different perspectives. Padmaja, of course, brings to the table many, many years of investing experience. I think you must have seen my more than maybe 150, 200 odd investments through IAN. Many companies have gone global, some done really well, some not. We'll look forward to some insights there. I'm sure, I don't know how many of you, but me certainly has had many, many SMSs from ShipRocket. Usually they're on time and they're fantastic. So Gautam is here from ShipRocket, and one of the fastest growing logistics startups in the country. And you know, all of these very exciting startups ride on infrastructure. Earlier, Mr. Khan spoke about, you know, Aadhaar, and guess what Aadhaar runs on? So welcome Bhavna from HP Enterprise, one of the leadership team members there. I'll take no more time because I know they want to hear you and not me. Padmaja, quick couple of minutes, some opening thoughts, the whole globalization journey. When's good, when's not so good, what does it take? Over to you, ma'am.
Thank you, Jaideep. And before I start, congratulations to the Mint team. An awesome event, awesome initiative, and a great platform for startups, not only to interact, not only to talk to all of us within the room, but with the Mint platform, I'm sure you'll get much more visibility. So congratulations on getting this opportunity. To Jaideep's question, I think going global is something itself has this perception of going west. You know, that going global means going to North America. I think to me, going global is going west, north, east, near east, Middle East, and even south, right? I think today the world is our oyster, and there's really no reason why we should just focus only on North America. We should absolutely go there, and we can absolutely take the markets there, but there are much larger markets if we embrace the world much more. So I think going global to me is actually going global. That's number one. Number two, I think, you know, honestly, what Mr. Khan said in the previous session, or the earlier session, was very pertinent. Today, India is the innovation hub of the globe. And that's a very big statement, because we are innovating at every sector. Innovation and entrepreneurship is a virus that has infected every sector in the country. And there is no vaccine, and I hope that no vaccine comes up for this, because this is actually critical for the country. It's critical for our economy, and it's critical for our citizens. So this innovation and this entrepreneurship is creating some of global leaders right here. And this country has that, provides that opportunity. We are the 6th largest economy, but more importantly, we are one of the largest populations. Diverse, very diverse. The consumer in the north has a very different want compared to consumer in the south, right? And that diversity and the size of our markets itself is an opportunity for companies to not only innovate for small markets, but to innovate, how do you scale? How do you build for diverse customers? How do you build for diverse pricing mechanisms? Think about it, okay? So what you can operationalize here will 100% guaranteed work in some other part of the world. So going global is just an extension. You don't have to think about going global. What we need to think about is how do you build companies for Indian markets, domestic markets? How can we be Atmanirbhar? Because if we are Atmanirbhar, dunya will be nirbhar on us. They have to. Because there's talent, there's innovation, there is scale. We are going digital, and technology is our highway, infrastructure highway, and whatever works here will work somewhere else in the world. So to me, I think, Jaideep, that's what means for me globalization.
Wonderful thoughts, Padmaja. Gautam, you heard Padmaja talk about India being an innovation hub, home of much talent, a booming domestic market. I dare say Shiprocket's kind of ticking all those boxes in itself. But I'm sure you also face challenges scaling domestically, and I know you're also looking to take your first steps overseas. So do those thoughts and words echo? Are your experiences different?
I think everything that was said over here is absolutely correct. If you look around the world, India has the right people, right business innovation, and technology innovation. Those are two things that you need largely. It also has the right market so that you can test your product correctly over here. So whoever you're selling to, I think India has, when you build a product, you can run that product in India, and then you can transpose that product to another country very easily. Again, obviously there are a lot of other things which are important, but typically for any startup who's looking outwards, it's important to understand what customer they're looking after. So typically, are you looking to service a small business, or are you servicing a large business? That is a larger division of how customers are. And then the paradigm changes quite a bit, and which part of the world you're looking at. As you know, West is not the only place. There's markets which are developing now in Southeast Asia, MENA, Africa. A lot of locations are now developing. And if you look at all the startups that have done well, you will find them as technology startups, which are SaaS companies who are offering technology solutions to, they can be in logistics, they can be in customer support, AI. There are platforms which support AI. There are machine learning softwares. Typically, you will find those companies doing very well. But something which is very important for any company to understand is what customer are they going after. If they're really going after enterprise customers, then things like having people there, which is having a sales team in that country, is an expensive thing. And then if you're targeting a smaller business, then you can run sales from the same country. But your acquisition costs through running ads, etc., acquiring customers, and then converting them into actual paying customers, all that. So only thing which changes drastically is the customer acquisition cost changes, be it enterprise, be it long tail. So typically that is something which companies should look at, how you're acquiring the customer. Because I know there's no question on the value prop. Because you've proven the value prop in India, some of these products are far and beyond better than the international counterparts which are available today. So there are several examples for that. But
so just to build upon what I guess both of you said, so one, take advantage of a thriving domestic market. Second, where you end up from a globalization perspective is a function of what kind of company you are. So possibly if you're a SaaS platform, maybe the Western markets are the place to go, but maybe for a Shiprocket, a more fragmented supply chain country, Southeast Asian countries, etc., maybe a more attractive place to go. What doesn't change though, Bhavna, is that all of them need super strong digital infrastructure. And I think Salil touched upon that as well. It's the foundational layer. At HP Enterprise, you folks are working with many Shiprockets, many startups of, I guess, all shapes and sizes. And I know that you power up, I know the Aadhaar systems, a lot of the UPI stuff. So there's the enabling infrastructure as well where you play. What does the world look like from your perspective here?
Great question. Thank you. But first of all, I must say that, startups are one of the most resilient segments, in the country. And I think they are somebody that, they display tremendous courage over comfort, especially when they're expanding. And at least, we fundamentally believe that, when you're expanding, you should do it for the right reasons. As Gautam also talked about and Padmaja also touched upon it, that, every company is unique. The verticals that they're operating in, I think that's where fundamentals of growth become extremely important. That, when you're looking at it either within the country, I feel that, India is made up of many little Indias, right? So each region, each industry responds differently. So when you're expanding, it becomes extremely important to see that, why are we looking at it? What is going to be the user behavior there? What are going to be the priorities and what may be the potential pain points, which are going to be there? And then rebalancing what you have. It could be your technology landscape and the way, because especially in the beginning, you always prioritize speed and growth over, security, over control, and you tend to give up that. But when you're scaling, right, and especially in a different country altogether, right, the dynamics there could be different, the regulations could be different, the rules for governance could be different, the data laws could be different, and that's why it's very, very important, at least from our perspective, every time we advise, the customers that we work with of all sizes, right from NASA to startups to everywhere, that, the fundamentals need to be very strong so that you have a very balanced approach and not a very extreme approach, because then your time will be well spent on scaling up and growth rather than worrying about some of these, intermittent issues. Thank you.
So you bring a new perspective there, different regulations, the need for a more localized partner in some ways. Padmaja, let me come back to you, because the story of globalization is also, I think you mentioned the story of timing, right? When to go global is as important as the decision to go global. And while in some ways I agree with you that it's just an extension of kind of building the organization, but the reality also is that today, frankly, everybody I meet who's a hiring manager is struggling for talent. There's a huge war for talent on, I don't know where this great resignation became the great talent war. If everyone's resigning, where's everyone going here? But anyway, that's a conversation for another time. But the whole talent question kind of throws a long shadow over globalization, right? So as startups mature, we saw this many years ago with the Indian IT services companies. The first offices which were opened were basically folks sent out from here. And then over a period of time, if you go to a TCS or a Wipro office today in the US, you'll see a lot more local faces there, right? I'm seeing the same thing happening with SaaS companies, where they kind of start with sending folks from here and then building out over there. So that's one sort of journey that one sees. But in the context of IAM, right, there are many portfolio companies you have. Unifor comes to mind most recently, congratulations by the way, which has gone unicorn now. They've gone global, scaled up very well. Others possibly not so well. What do you see as the difference between the two here?
So, thanks. Actually, it's a very sharp question, because why do companies fail? Let's take it head on, right?
Go on then.
I think for me, there's only one reason and one word, and that is execution. There is no other word, because for startups at least, there are only two resources that matter, and they need. One is talent, right? And the talent is brought in by the founders. The founders themselves, who they can attract, how do they engage them, how do they integrate them, grow them, etc. How do you build the team below you, below the founders? So talent is one resource which the entrepreneurs bring. The other resource is funds, okay? Now, funds, unfortunately, to me, are not one-dimensional, writing a check. Of course, it's important. I mean, the reality is if you have funds and no team, there's no venture. And on the other hand, if you have a team and there are no funds, there's nothing going to move, to be honest. But I think it's not one-dimensional about one check or writing a check. It's very important that what is the quality of that money? How does that money, which is buying shares in your company or giving you loans or whatever that structure be that it may, what value addition is it able to bring? Because they have the same objective of creating value in the company, exactly the same as what the founder has. So, the kind of mentoring, kind of value adds, kind of experience sharing, providing access to global markets, providing access to talent, and when you have the Black Swan event that we all went through for 2 years ago, I think just being there to even hold the startup and a young startup's hand and sort of make sure that it stays standing coming out of the COVID tunnel, I think that is the quality of money that matters. But investors can do what they can. But if there is a lack of execution, if there is a lack of, there is a going slow in even taking a swivel, right? Not taking advantage of opportunities that present, I think all of that comes under the word execution. So borrowing from Vidya Balan here, where she said entertainment, 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 I think it's execution, execution, and execution. Because companies which execute, founders and teams that execute, there is no way that they can fail. The only way they can fail is the macro situation sort of collapses, and we are seeing that. But otherwise, it's that one word.
Gautam, coming back to you. Talent, funds, execution. As a co-founder, your ability to not just attract, but I think equally to retain talent, Padmaja mentioned as well. Has that been the secret sauce for Shiprocket scale?
I'll probably first try and piggyback on what she said about the investor money.
Sure.
And in a global expansion aspect, I've also found this, and it's interesting, when you're going and raising money and you've found some value in your product, you've created your value prop correctly, it's always good to also catch hand of people who can open doors for you. So if you're looking at a Western market, maybe a Western, I think Unifor also has partners who have opened a lot of doors for them in the US market because that's a large market for them. Similarly, that's also something which is very good. And these I would call them smaller funds or more people who are actually working with startups to grow, to make them big. It's always good to catch hold of those people, and they'll be super interested. So that's one part. Hiring and retaining people. Retention, I think, it's a lesser problem than actually hiring. For businesses like ours, which went through a crazy growth trajectory through the COVID times because we were servicing the retail market, e-commerce retail market, and that was the place which all the growth was happening when everything else was going down. Hiring for us meant a lot of challenges. One was hiring talent, and actually, for the first time in your life, you're not looking at people, you're not meeting people. Even senior talent that you're hiring, you're not able to meet them, and it's all happening over Zoom. That was one challenge, and then the whole market dynamics also changed during this time, where there's a change in the brackets. It's not initially; it was only impacting the technology guys, maybe developers or product guys, but very soon it changed to even leadership positions or operations or sales, etc. Because I think overall the startup ecosystem was growing and people were hanging across. I think this is something which everybody has to, it's a struggle. It's a struggle to find the right people. You have to really do the selling of your company. You're not hiring an employee anymore. You're hiring another co-founder, and so many co-founders. Unless they believe in what you're doing, they will not come on board. And I'm not talking about senior leadership only. I'm talking about middle management as well. That is one thing, and we've been able to do this. I think it's about hanging in there. I think the market is kind of stabilizing now. Things are getting back to normal. This is something which is important. Global hiring is something which is essentially important. For example, we stepped into the MENA regions, firstly looking at Saudi Arabia. We had to hire local talent for sales. One is language, simple things like that. The other thing is actually an individual trusting the other person, because the sales cycle and the sales process there is a lot based on trust. And this is also true for Western markets, a lot of European markets, a lot of even North American markets. That is why you see all those local faces and a lot of those sales guys, and that is where a lot of money actually goes. I don't know if I answered your question, but
no, absolutely. So it's interesting. Both of you brought out this dimension of having the right investors as well who can help you with the globalization journey, and then of course the talent war is an evergreen one. Bhavna, before we dive into the HPE thing, I mean, you yourself are a very senior leader in the team. Is this talent war also afflicting HPE Enterprise?
I thought it would. Yeah, but I think we've been fortunate. We have, and that to me, by the way, was an eye-opener when I joined, because I've seen the kind of attrition that affects everybody. And I think the way HPE really has thought through, right, this across all segments is, I think we have a good problem, right, because we have to have different types of talent, right, people who understand the older systems, people who understand the newer systems, and people who have the continuous journey. So we've had a large part of our workforce which has been continuing for really long years, right? I mean, the average age of experience, at HPE, like very, very impressive. So I don't think, we have been affected by it. And I think that's where a lot of times, in fact, earlier, when we were also connecting, I think one of the philosophy has been that, you hire people for the right attitude, right? And then you skill them, right? Because if you have got the right people who are passionate about what they're doing, more often than not, then they stick. So it's been,
absolutely.
We've been blessed.
Let me just come to the more topical question, or this was more a curiosity thing. This business of helping startups to globalize. Now, I know many of your peers, and I know you as well, run programs, structured programs, where you would go to a ship rocket and say, hey, we're working with, you mentioned Saudi Arabia, so I'll take that as an example. I'm just making this up. 15 out of the top 20 companies in Saudi are our clients, and we can create a engagement platform for you and so on. Is that something you folks are actively doing in India as well? Tell us a little bit about that. Yeah.
Yes, absolutely. In fact, that's something which is clearly a focus area, and I feel that especially when startups, right, I mean, when they are growing, right, it's very important for them to look at the partnership element. Because a lot of times, when you have the right partners, right, and you can literally piggyback on their strengths. Right? In terms of, for example, at HPE, we have now very actively started connecting with a lot of startups, not only in the country, but we also bring a lot of expertise of several countries where we operate in. I mean, there are literally 11,000 to 15,000 transformation projects, that we execute every year, and the kind of insights that we are able to bring, that actually helps a lot of startups of all sizes, to ensure that you don't have to really reinvent the wheel. You're able to drive a lot of performance, you're able to drive a lot of security, you're able to drive a lot of cost control. I think that's something that we have started doing very actively to ensure that, you are able to really derive the best benefits from the GTM for us that already exist. Since, as I was sharing earlier that, we work with enterprises, larger ones, the mid-level segments, and the startups as well. And what it also does is, not only in terms of utilizing the IT landscape or the infrastructure, but also leveraging our presence in some of these larger enterprise, which is something which a lot of times, a lot of startups who are already in the SaaS segment or in the B2B space, they really value that. Because they, then we are able to, look at a non-transactional, more strategic approach, and not just, the commercials alone.
Interesting you say that. Let me just pause my questioning to you guys for a second. I see we're down to almost the last 5-6 minutes. And I've got a couple more questions in my back pocket, but we're a room full of entrepreneurs and investors here. So I do wonder if somebody wants to throw a question at the panel. Anyone from the audience? Salil was right, the lunch was too good. Next time sandwiches, Salil, yeah? Sandwiches and coffee. Anyone have a question for my panelists, or I'll crack on otherwise? No? Okay. So let me come back to you guys. Oh, well, there had to be one. No?
See, as the startups are scaling, I'm seeing traditional companies have also started jumping the wagon and operating in a similar lines as the startups have started opening. So you're not just playing with chance now, you're also playing against the traditional companies as well. You look at Bajaj Electricals, right? I mean, they've started bringing the electric scooters. It's a level playing field. At the same time, now, as a startup, you're going to compete with a very monstrous, dinosaurous companies, and they're also becoming as agile as you people have been. So, Shivrocket, I will start with you as this question. Do you feel that heat today? If yes, what's your viewpoint, how you take it forward, and we can take it to other panelists if they want to add.
I love the heat. I'll give you the reason why. Because we are the ones who are enabling these guys to compete with the Amazons or the Flipkarts of the world. So if I go and, this is hypothetical, so I go and tell Arvind that I'll make you as capable as an Amazon to be able to sell your products, and when people choose to buy the same product that you're manufacturing from Amazon or you, they will obviously say that please come to my website or my store to buy it. I am enabling them to do it. So I'm on the other side. So at least in my space, we are super happy with the traditional guys jumping the bandwagon. And they've been trying to do it for a very long time. I think what is missing is what you were talking about, the ecosystem or the platform. So in the retail e-commerce space, at least where we function, or there are a lot of missing parts for any large company to be able to be as good as Amazon, to be give the customer a customer experience or a delivery experience. That is why you like buying from there and not buying the product directly from the website. It's not these traditional companies don't have the website these days. All of them have it. It's just that they can't offer the experience. They have the same price, maybe lower. So,
okay. Bhavna, is HP Enterprise learning from startups as well? Transmitting Salil's question to yourself, what are you folks doing which you've learned from your younger competitors? I'll never say better, but younger.
I think it's such an amazing market. I've always felt, not just from the technology perspective, but I think overall, I somehow feel that it's no longer online versus offline, right? And I always feel there is enough room, right? As long as you've got the right value proposition, you've got the right fundamentals, right, in place, there's enough and more that everybody can do. And in fact, what we also do, as a technology company, we also believe that, it should not be that, we should try to do everything on our own. So what we actually do, we in fact have a separate arm altogether called Pathfinder. We actually actively invest, in startups. We actually invest in, we are always on the lookout of companies, not just in India, but all over the world, to see that, what are some of the problems that they're solving. And in case those problems and solutions can be replicated, everywhere, we go ahead and we actually acquire, right? To ensure that, we are always also on the edge, right? And I love to say that, we are a startup with an 80-year-old legacy. And that keeps us young, keeping in mind that there is somebody out there who's innovating much faster than us. So we would rather partner with them.
So you partner with them, and I dare say, you won't say it, but I will. Once in a while, you acquire them as well. Padma, you wanted to add something?
Yeah. I think I want to take away the heat from Gautam, sorry. I don't think startups are facing the heat. It's the older traditional companies that are facing the heat from the startups. That's the reality, okay? Because the startups are actually eating their lunch. They will not exist, period. I mean, look at the number of startups which have come up, and look at the number of companies which have been around for decades who don't exist. And you'll clearly see that there are new companies, you sit down and you look at their propositions, arey, ye to wo company kar rahi thi. They've just gone digital, they've just done things differently, they've innovated, they've done things to speeden up, better quality, etc., etc. So I think your question, if I may dare say, I think it is not the startups who face the heat. It's the traditional companies that face the heat. During the pandemic, I have had many calls from traditional companies which have said, ma'am, koi startups batao jo hamari logistics problem solve kare, koi hamari manufacturing, sanitization ki problem solve kare. Because there were very fundamental problems that these companies faced with the tough lockdown that we went through. And they realized that they could not handle it, they needed startups. And today, when I speak to a number of companies, okay, including our own investor group companies, they reach out not because they want to invest in it. Yes, they do want to invest in it. That's not, that is quite okay. But what they want to do is to say, how do I work with them strategically so that I have a differentiator and I can grow, and first of all, I can exist and then I can grow. That's number one point. And the second big point, which is, I think I'm seeing in industry, when I'm speaking to a lot of large corporates, is the reason they want to work for startups is they want to leverage the quality of talent. The quality of talent in startups is extremely high today. anybody who is doing well, who understands their domain, who is focused on building something, they're going the startup way. When I was growing up, startups was the last option in the career path. Today, it's the first option in the career path. So these large companies are facing the heat that they're not getting the right talent. So they want to engage with startups to say, is there another format other than just recruiting them and bringing them on board for me to actually leverage the talent? And therefore, you will see a lot of mergers. Therefore, you will see a lot of acquisitions. It's because of these two things. So to me, I think it is not the startups which are good startups don't face heat, they create heat. And traditional companies are
Summers
facing
are coming, it's getting hotter and hotter all across the ecosystem. Guys, I'm going to have to stop. We are flat out of time. But what a fascinating finish. I love a disagreement. It's fantastic. We've traveled a great journey, and I think... Sorry.
I was just saying that I said I love the heat.
You love the heat.
I never said that then startups are feeling because the large guys or the old guys or the old companies are facing the heat. It means more business for me.
Spoken like a true entrepreneur, sir. You know, with the heat come the mango, so I love the heat here. But I must say, for the entrepreneurs in the room, there's 2 or 3 takeaways that I must leave behind for you to chew on, right? Choose your co-founders carefully. I think your view as especially in your early days, every team member having the attitude of a co-founder is a critical one. Choose your investors carefully. Make sure that there are people who can partner with you through the journey as you scale and you globalize. You know, choose your infrastructure carefully. You'll need to think about not just the infrastructure of today, but how you're going to be able to scale it and globalize with it. I think you made the point about, you know, different compliances, the need for following different sets of rules and regulations and so on and so forth as you go across different geographies. I think the other takeaway for me was all of you echoing with different words, the focus on execution. And it always reminds me of that old saying that ideas are cheap, but execution is priceless. And for me to be a great executor as a moderator, I must keep time, and therefore I must wrap up now. Thank you so much. Please give a warm round of applause to my wonderful panelists. Thank you so much, folks. Thank you for your time.
Can we have the photographer near the stage, please, to take a group picture? I would sincerely like to thank all the panelists for such a comprehensive discussion and the wonderful moderator over here for taking this up in a very thorough manner. And we have got some pretty interesting key takeaways from this discussion, and we sincerely hope that this would help our delegates to better understand the ways of globalizing their startups. On that note, meanwhile, we are setting up the stage. I would like to remind all the delegates that you may now tweet live with us. You may tag us at LiveMint, at Tech Circle India, and you may use the hashtag MintStartupIcon2022. On that note, I would once again like to repeat the 3 key takeaways that I got from this particular discussion. Number 1, it's the right execution. Number 2, it's hiring the right talent and finding the right investors for your startup. On that note, ladies and gentlemen, we will move on to our next session aligned. It's a fireside chat session where we will discuss the scope of policy framework by the government aimed at facilitating startups, especially in the times of post-COVID era. Well, this is going to be a very interesting conversation where we'll get to learn the roadmap of government to empower entrepreneurs. Well, for the same, I would like to invite on the dais our very distinguished speaker, Ms. Shruti Singh, Joint Secretary, Department for Promotion of Industry and Internal Trade, Ministry of Commerce and Industry. Let's welcome her with a huge round of applause, everyone. And our moderator for the same discussion would be Ms. Ranjani Raghavan, Associate Editor, VC Circle. Is this working? Yeah? Okay. Great. Yeah, that's for you.
So, thank you all of you, and welcome Shruti again to this session. Before I dive into the conversation, I thought it would be interesting to highlight a few aspects of Shruti's career. She's a history graduate, a gold medalist, I'm told, and she was the first deputy commissioner of Jalandhar, municipal commissioner of Jalandhar, and the first municipal commissioner of Ludhiana. And and she made joint secretary last year, and she oversees the startup initiatives, and so maybe we can start with that, Shruti. What are the highlights that you think we ought to know about the startup initiative?
Yeah, before I come to that, I was not the first deputy commissioner of Jalandhar. I would be really old if I was the first lady deputy.
Lady deputy, exactly. Okay, that's what I wanted.
It's okay.
Yeah.
Startup India initiative is one of, I think, the most successful initiatives of the government of India. What is peculiar and special about it at the same time is that it's an initiative entirely driven by the ecosystem. It was launched in 2016, so we are 6 years old now. Back then there were, if the number is correct, around 729 startups were recognized as startups in 2016. And today the number is a staggering 65,000 plus. We are amongst the 3 top nations amongst the world as the startup ecosystem is, as far as that is concerned. And this is no mean feat. 94 unicorns as we stand today.
That's right.
Last year was the year of COVID. There were economic issues everywhere, but 44 unicorns came up in India in 2021 itself. It's being touted as the year of unicorns for the country. And what is more interesting is the fact that these 65,000 startups are not just coming from Bangalore or Hyderabad or Delhi or Bombay. 50% of them are from tier 2 and tier 3 cities, and that is what really stands out. So unlike some other countries where there is one place from where all the startups are coming up from, we have cities like Bhopal, Indore, Ernakulam, Sonipat, where startups are coming up in a big way. So I think that would be the biggest achievement of the journey so far.
What are you seeing from there, from tier 2, tier 3 cities? What kind of startups and what kind of initiatives are you all, putting forth to kind of encourage more of such startups from these areas?
The Hindi word jugaad. We excel at it, and I think that is what is that innovative spirit within us in what is getting startups from these tier 2, tier 3 cities, from villages, from smaller cities. We launched the National Startup Awards 2 years back, and our aim was to pick up startups that are working in sectors that cut across agriculture, health, social innovation. So we don't rate them on the basis of the commercial success. We were seeing the kind of innovation, frugal innovations that they were coming up with to solve local problems. And the number of applications is increasing with every passing year. We have also launched a state startup ranking exercise 3-4 years back. So other than just national policy making, the true essence of entrepreneurship can be gauged only when something is happening right down at the block level, at the village level. And right now the 3rd edition will soon be launched of the states ranking, and we see that by giving direction to the states on where to go in incubation support, in mentorship support, in funding, how to promote women entrepreneurship, what to do in college campuses, how do we get startups from there. So that direction is really helping startups grow across the length and breadth of the country. There are a couple of schemes also that we launched. The seed fund scheme is something which was launched just last year by the Prime Minister. We fund startups at initial stages through incubators. In our fund of funds scheme, which is a 10,000 crore scheme, we are doing equity funding for startups through AIFs. And a couple of them, more than 10-15 of them have become unicorns, the ones that were funded by our ministry. So there is quite a bouquet of offerings that we give to startups, so that we see this whole 94 unicorns is something that took us all this effort. Yeah.
But what are the challenges? Can you, throw some light on that? Because you must be speaking to a lot of startups, and they probably have, a lot of demands from, requests to the government. What is your feedback on that? What kind of challenges do you all face in accommodating all those requests?
The top 3 or 4 that come to my mind very quickly, one would be loans. Maybe startups need loans. Not all of them want to dilute equity at very early stages, and banks are, in spite of so many schemes, in spite of so much push, we do try to encourage banks to give loans to startups. There are schemes around MSMEs where collateral-free loans are supposed to be given to young entrepreneurs, but there is a lot of resistance by the banks in somehow trusting new people. That is one issue that startups do face, and they talk to us about it. The second thing, being a woman, for women entrepreneurs, it is very difficult to raise money.
Yeah.
So somehow the confidence that investors feel with a male founder, I don't know why, the moment a woman founder or co-founder steps in, they probably don't feel very confident. That is something, again, which is very challenging. We do, as a department, we do conduct workshops to encourage funding to women entrepreneurs. In our own fund of funds scheme, we have 1,000 crore specially allocated so that women get it. There are ways we are considering so that women get more hand-holding, they get more exposure. Thirdly, again, I would say the startups that are coming from smaller cities, from rural backgrounds, they require a lot of hand-holding while making the right kind of pitch to investors. So their idea could be very good. They also sometimes are able to raise some initial capital by bootstrapping from their friends, from their family. But how to pitch in front of an investor, it's again something that they need help on. Mentoring, that is something that people need help on. They have great ideas, they don't know but how to put it forward. So for that also we're coming up with a mentorship portal. It'll be launched within 2-3 months, where as a startup I can go choose what mentor do I want, and there's a lot of interest from the mentors. So from unicorns, from big groups, from Time, IVCA, they're all reaching out to us. They want to support the startups too. So we are going to come up with this program very soon, where there'll be a dedicated number of hours for startups. We are coming up with a portal for matchmaking with investors.
Oh.
So that a startup won't have to, run around and seek appointments. There'll be one central portal where the investors, they are also very keen to look at good ideas. So they will be connecting to startups to that portal. So just some new things that we are coming up with.
Yeah. I mean, I want to alert the audience that you can ask questions if you want, because Shruti has promised to be, quite open about this. But, going forward, what are the kind of other proposals? I mean, some of them that you mentioned, but I know you said that there's a fair bit upcoming in the pipeline. So what are there any key proposals that you can alert us that startups can look forward to?
So as I said, so this initiative is entirely driven by the ecosystem.
Right.
So the more you demand, the more new programs we launch. So with at this forum, I'd also make a request to all of you to engage with us and reach out to us for any help that you want. It was the idea from the ecosystem to get a mentorship platform, and here we are doing it. It's all set to be launched in some time. But the Investor Connect also, it came from you all, and that will be a one-stop shop. So whatever, maybe while you ask questions, if there's anything that you want, we will totally look into it and ensure that it's done. The seed fund scheme, I remember there was an event like that 2 years back, and there was such a strong demand for seed fund. Everybody said that, ma'am, for equity there is something, but for us there is nothing. We want something early on. We want some grants. And here we are, 1 year down the line with the seed fund scheme operational. So do let us know what do you want. Please engage with us and be the driver of this program.
Which is your most successful scheme? Do you think you can share? You mentioned the seed fund scheme, the incubator scheme also, I believe.
So the seed fund scheme we run through incubators.
Okay.
We don't directly select startups. Startups we have a portal. They choose the incubator that they want incubation in, and we give money to the incubator, who then in turn selects the startups. Similarly, for the fund of funds scheme, which is a 10,000 crore scheme, very happy to share that almost 6,800 crores have been committed to AIFs. And AIFs in turn select startups. So, the beauty of these two schemes is that we as government, we are not directly selecting startups. We are maintaining an arm's length. The people who are in the business go and scout for the best talent. So investors or incubators, the ones who are actually out there, they are the ones who choose the startups. So no, nothing bureaucratic here.
Okay. Can you tell us about the new budget proposals this year? There are a few more funds that the government is has promised basically. What can you tell us about where they are right now?
I think this budget, the Union Budget of 2022, the importance given to startups and innovation, I think it was absolutely phenomenal. It was all over the budget that startups is something that the entire country is looking at. There is talk about funds being created in a public-private partnership model. So the government would be putting in less than maximum 20% of the money, and it will be entirely run by the ecosystem, by the private players, by the experienced fund managers. So like I mentioned, DPIIT has its own fund of fund schemes, MeitY has its own scheme. So different sectors are expected to now create their own funds so that you can have some sector specific funding. Drones got a lot of mention in the Union Budget of 2022, drones as a Shakti, so that is what stood out. NABARD is, so NABARD rural startups, so this whole fund under NABARD is going to look at startups specifically targeting how can issues related to farmer or agriculture be solved. Defense R&D has been opened up for startups, so very futuristic budget, and there's a lot of activity that you'll see soon around it.
Oh, can you tell us? Like, what kind of activity?
Different sectoral departments. So for defense, it would be defense.
Right.
For agriculture, as DPIIT, we recognize startups. We are like part of everywhere, but it's going to be very sectoral.
I mean, one of the key, feedback that we've, received is that, they want the government to sort of expand the definition of, which startups can be eligible for some of those schemes. So, what is the government's thinking there? What are the challenges in, that the DPIIT is not able to do it, for instance?
So the moment a startup gets recognized with us, and the eligibility criteria is very easy for a startup to meet. Less than 100 CR turnover, less than 10 years of age. Of course, it makes sense. You wouldn't want to call a 15-year-old company a startup, right? Less than 10 years of age, a private limited company, LLP. The moment you're recognized as, and within 2 to 3 days you do get recognized, right? So the moment you get recognized, there's a whole plethora of things that you just get. So you get favorable exemptions. You get exemptions in any kind of public procurement. So you don't have to have a prior turnover or a prior experience and all that. So that's automatic. So the moment you get recognized as a startup with us, there's so many challenges that you can just bid for. There's so many, for angel tax exemption, there's just a declaration you have to give to the revenue department, and you get that exemption. Probably what you wanted to mention was the income tax exemption of 3 years. For that, there is an interministerial board, because that is something that, in my personal opinion, income tax exemption is something where you are, if as a person I'm making money in my business, so why should I not be paying my taxes to the government? So it should be a rarity. It cannot work on demand. It should not be something automatic. So the startups that are doing something truly innovative, and the company is not a reconstructed company, or there's no issue of shareholding, it's got a clean slate, the exemptions are easy to come through. So more than 400 startups today have already got exemption under that particular
scheme. Yeah, okay. We have 5 minutes, so if there are questions, then now would be the time to ask Shruti. But, going, people are shy. Okay, yeah.
innovation was, happened because of DARPA, which was set up and which the government funded, which, basically created the infrastructure technology for a lot of others to piggyback on later. In India, is there any plan to invest in truly, fundamental kind of research or infrastructure, which other technology startups can actually, piggyback on or leverage, especially, if one looks at the next 25 odd years, climate could be one, cybersecurity as the other. So is there any thought around creating something like that?
I think it's a lovely idea, and we would really want to get some more feedback on which are the sectors we should be looking at. Again, I would repeat, there would be different department ministries who would probably be focusing on it and already investing into R&D into those sectors. But if there is still something more specific, maybe we would love to engage with you. Yeah. Something on the women, these women startups, right?
Yeah, there are women startups.
So is there any demand that you would have, some ideas you would have, or are you satisfied?
I was wondering, actually, you mentioned about, mentorship, and you mentioned about you want to provide support to a lot of these entrepreneurs about how to pitch. Can you tell us more about that? Like, is there going to be a specific structure through which this will be channeled?
Yeah, so this platform that we're coming up with is going to be an investor matchmaking platform.
Right.
So, talking about specifically about pitching, if as a startup I'm in a very early stage, it's still ideation, and I register myself on that portal. The moment I sort of give details of what I do, where I am, there will be an option for me to upgrade my skills on how to reach the level where I can actually start asking for, raising money. How do I do that? So we will be mentoring startups on that front also. From ideation, how is it that they can reach to the commercialization scale, and how is it that after that they reach out to investors? So that is the entire process will be hand-holding startups on that. So these two portals are going to be quite interconnected. The one on mentorship and the one that'll do your matchmaking with investors.
And you already have applications for that?
We are in the process of creating the portal and launching it very soon.
Right.
It'll be launched with a big bang, and so that the ecosystem knows that here is a one-stop shop.
Okay. And I also wanted to ask you about the, you all had a push some years ago about Indian language startups, about how to, give that an impetus. Can you tell us more about that area?
So, vernacular is something that we really laid a lot of stress on. 2-3 years back, when we had launched the state ranking framework, there was a lot of, there was many questions that depended on feedback from the beneficiaries. And when we started calling them, we realized that the call center from Delhi, the kids would either talk in English or Hindi, nothing beyond that. So when there were startups in Assam or in down south in Kerala, they would say, talk to us in our language. And this entire language barrier, we quickly, within a couple of weeks, we turned around, we got our callers speaking in their local languages. And then we realized this language barrier was such that probably people couldn't even understand what was on a portal.
Yeah.
Benefits were, they didn't know what schemes the government was offering. Today our portal has multiple languages. So in Malayalam I want to read, I can read things in Malayalam. I want to, in Gujarati, it's all there. 2 years back we took up this initiative with Meti. And after a lot of rounds of meetings from the ecosystem and with Meti, they are finally going to come up very soon with a program by which startups working in Indic languages will be picked up, and so that who should use that technology and see how we can, commercialize it. How can we use our day-to-day apps or other, conveniences through the Indian mapping system. So that is another thing that we should see in the near future.
Is there any plan to, raise capital for some of these, your own startups, with so many unicorns coming up? You probably will, is there any plan for something like that?
So we are seeing a lot of interest from the domestic VCs, from international funds as well. EPFOs can now, in the last year's budget, EPFOs can invest almost up to 5% of their surplus into Cat 1 and Cat 2. So we see a lot of funding coming into startups, and I think that is what is giving the real boost to the ecosystem.
Sure.
And now.
Yeah. It says time's up, so we should, you know, oh, yes, please. Yeah.
Ma'am, there are so many like sectors of startups you face every day. आपका favorite कह सकते हैं कि sector कौन सा है जहाँ पे अभी भी काम और करना बाकी है startups को?
Education. As a mother to, I would say, education. There is so much scope. Making kid-friendly books, kid-friendly apps, kid-friendly toys, kid-friendly games. I think that is one sector which will really rise in the coming days.
We'll let her go now. I know you have a meeting after this. So can I invite you all to give her a round of applause?
Thank you so much. Thank you so much.
Being very sportive in answering questions.
Thank you so much. Thank you, Ran. Talking to you, and thank you all for being such a great audience. Best wishes to all of you in your journey, and for any idea that you have, it might not be the sector that you're in right now, but any idea that you have, do share it with us. We would love to take it forward. Thank you so much.
Thank you. One.
I would like to thank our speaker, Ms. Shruti Singh, for enlightening us on the several expedient and beneficial initiatives by the government for startups. Also, I would like to thank our moderator, Ms. Ranjani, for conducting a very nuanced discussion. Thank you so much for joining us here. May I now humbly remind all the delegates that they may tweet live with us, and they can tag us at LiveMint and at Tech Circle India. Also, you may use the hashtag MintStartupIcon2022. All right, with this, ladies and gentlemen, we will quickly move on to our next fireside chat session. For the same, we have prepared a very interesting factoid. Can we have the factoid on the screen, please? Well, our topic for this keynote and fireside chat session is going to be India offering a palette of consumers opportunities galore. Well, the startup ecosystem is getting substantial support from foreign and Indian investors who have shown more faith in the industry, and they have provided funds to help the companies to grow leaps and bounds. And the market of India offers magnanimous opportunities to grow under its very rich and vibrant culture, which makes it a little more challenging to cater the needs of such diverse consumers. Well, innovation, however, plays a very significant role to overcome this challenge. So what all galore opportunities are lying ahead in this vibrant land of diversity, India? This million-dollar question will be taken up by our keynote speaker, Mr. Abhik Singhi, Managing Director and Senior Partner, Boston Consulting Group. We would sincerely like to thank BCG for being our knowledge partner for today. So, ladies and gentlemen, let's welcome Mr. Abhik Singhi on the stage.
So, I was thinking about what the title of this presentation should be, and I think the 1,000 flowers blooming is probably the most apt representation of the same. I'm going to walk through 25 slides in 15 minutes. The rule of thumb is 3 minutes per slide. Obviously, that's not going to happen. So I'm actually going to take the first few slides and literally take 10 seconds on each slide. And the key reason for that is everything that you think about India, the opposite of that is also true. So let's start off with that. It's really a tale of two cities. If you look at some distance which has been covered, we are $3 trillion economy. Look at the kind of growth which has happened, 5th largest in the world. If you look at most parameters, life expectancy, health parameters, nourishment, we have improved significantly over the last many years. If you had invested 100 rupees in the Sensex in 2000, you would have 1200% compared to anywhere else in the world. The numbers are actually true. Okay, so look at the kind of returns which are there. But I'm going to take the same set of facts, represent them in a slightly different manner, and see how the opposite is also true. So if you look at it, GDP per capita is still amongst the lowest in the world. So while we are $5 trillion, we are still low. If we compare on many of the parameters that I talked about, there is still opportunity to improve. And even though the 100 rupees would have become 1200, in terms of absolute size, we are much smaller than many of the other markets in the world. Now, why am I talking about this in the discussion around startups and Thousand Flowers blooming? Because actually, in the case of many of the other things in India, you can actually say glass half full, glass half empty. In the case of startups, actually, it is more than half full. And so if you look at it, I saw the factoid which was there, the number of unicorns was 88, I think, in early February. Actually, as of day before yesterday, it had become 99. In the 8-year period, it has become literally 25 times, 60,000 plus. So significant increase which has happened. India, I do believe, actually has been a nation of entrepreneurs. But the word entrepreneur has come more recently, and I'll just talk about that. Headroom for growth. So interestingly, while if you look at unicorns, the gap between China and India is not that high. If you look at decacorns, the gap is 10x. And if I look at hectocorns, obviously there is nothing which is there in India right now. But like with many other things, if you actually look at the pattern of investment, you find that India is lagging China by 7 years. So that means that 7 years later, if it actually goes down the trajectory of what China is, you could actually see a very different picture than what we see here. Where I think there was a question in terms of sector. Interestingly, more than 50% of what we see is driven by e-commerce and fintech. And to my mind, one of the things, even if you look at the bottom half, a lot of it is what do we eat, what do we consume, what do we spend time on, where do we save, and therefore understanding what is driving that becomes important. Classical framework, demand side drivers, so you can either have consumer spending, you can have government institution spending, and you can have investments. I'm going to spend time only on one part, which is the consumer. On the right hand side, classical economics talks about land, labor and capital as being the key themes. I would say land has now become resource, and actually labor is talent. I'm going to actually talk about talent. So let's start with what we are looking on the consumers. It is a Friday afternoon, and it is helpful to have Amitabh Bachchan, right? So on one hand, anybody can say anything about anything, but today the startup, the company which actually owns the consumer, the customer, is the person who's reigning supreme. You look at almost any presentation about India in terms of what is driving India, and the fact that consumption is driving India's growth, is a fact. You have more than 60% of our economy as being consumption. But I would challenge you, look at any presentation, analyst report, etc. on India, you will find some mention of this. India is a young country, urbanization is driving, and about being a importance of men and patriarchal society. Each of this is actually untrue. Okay, one of the few things that one can be certain about is actually demographics. Between 2020 and 2030, India's population will increase by 130 million roughly. All of that population. So when we go from 1.3 billion to 1.5 billion, all of that increase, 150 million, is actually happening in the 35 plus age group. Today, the average age of the world is the median age of the world is 32 years, India is 20. Now one can debate in terms of whether urbanization is classified correctly or not, but actually rural, non-urban is very important, and it's actually going to be even more important because earlier rural was poor access, poor media connectivity. Today that is not true. If you look at the top 500 rural sub-districts in India, their average income is actually higher than an average tier 2 town. Okay. Number 3, a remarkable thing happened in India about 5 years back. The percentage of girls enrolling in school crossed the percentage of boys enrolling school. In 2020, the percentage of girls entering college exceeded boys. Think about it, what it means not only in terms of what happens from a jobs market perspective, but think of it what happens from a societal perspective. One of the reasons why China is very different than India is because of higher percentage of working women. That has many second order implications which are there. So this is one part which I talked about, 3 things which people actually often get wrong about the Indian consumer and the opportunity. The other interesting is we spend a lot of time on phone, no surprise. We consume a lot of data, no surprise. Where do we spend? Actually, we spend pretty much, the spend doesn't change too much, right? So anybody who thinks that, if I invest in one category over the other, I will have significant advantage, not true. Every category actually has opportunity. During COVID, we actually looked at themes of consumer behavior. There were some things that you and I and everybody else started doing, which we stopped doing when world became normal. This is what I would say the sensitive behavior. When COVID went up, we stopped and started doing things. COVID went down, we went back to life as normal. There are some things which actually didn't change at all. What you see at the right hand side of the page, the resilient. What is interesting is the 2 which are there on the left hand side, which is around accelerated, which rapidly accelerated, and the ones which accelerated and have sustained. No surprises, social commerce, healthier food choices are the 2 which have accelerated. With mobile, they are doing both, and many of times they are actually doing both at the same time as well. Then we get to the other, and I'm sure there are a few people, probably some of the older people in the room, who recognize what this movie is. Any guesses? Yeah, and there was a famous dialogue there about "Kaam dhoondna bhi ek kaam hai." When I graduated, and this is in the 1990s, actually, quote unquote, doing business was almost a dirty word. In 1970s, the brain drain, the first version happened. In 1990s, actually, if you got a good job in a private sector, that was the key thing to do. Civil services, actually, in both 70s and 90s, both were still there. I was actually talking to one of the directors of IIT, and he gave me a figure which actually just blew my brains away. He actually said the percentage of students from IIT who go today to do a master's degree just after IIT is less than 10%. Less than 10%. In the 90s it was close to 40%. In the 70s it was close to 60%. So yes, the reason why this is, I think, very important, which has happened, is entrepreneurship has become cool. Doing business, being a businessman, and I can say it, because I am a Marwadi. Businessman was something which a few communities did. For many others, it was a dirty word, right? But over a period of time, you actually see this happening. Many reasons, but I think the biggest reason has been the success of the previous entrepreneurs. I think that is the biggest driver which is there. I think if one asks the youth of today who their role models is, yes, you will find the occasional cricketer, film star, etc., but you will find many entrepreneurs also as role models. Jaideep in his panel talked about the Great Resignation and how can you have a presentation without Great Resignation, which is there. So an interesting paradox is in a country of 1.35 billion people, if you ask any company, doesn't matter whether it's a startup or an established company, if you ask any company what is the biggest constraint to their growth, they would say actually people. They would not say capital, they would not say red tapeism, they would say people. Every company that I have worked with, every entrepreneur that I have talked to, doesn't matter new age economy or old age economy, the single biggest constraint to growth is people. I was thinking of putting a third Amitabh Bachchan picture, which is, मैं आज भी फेंके हुए पैसे नहीं लेता हूँ, right? Because the reason is actually capital is easily available, but what is more difficult is to find the talent. I didn't touch upon it, maybe in our conversation with Kamal. I think one of the things which has really made it happen is the digital infrastructure which has actually come up. The kind of barrier to entry from an infrastructure which was there, whether it was a public infrastructure or those available quote unquote on cloud or otherwise, actually has been a big unlock. And where I was talking about the supply and demand side drivers, I was talking about the infrastructure and data actually being one of the key enablers of doing that. So this is the 1,000 flowers blooming, but I do want to end with one page in terms of the way forward. And this is something, where do we go from here? And you see a set of words here. I'm not going to go through each one of them. I think interestingly, startups need to think about not only paid acquisitions. At some point of time, the music is going to stop. And therefore, from paid acquisition, how do you think about earned acquisition? I think that's very important. As people think about revenue, yes, acquisition speed is important. I think what is going to be critical going forward is retention depth. It's not about acquisition speed. I think the question which will get asked of entrepreneurs, of startups, actually will change from the first to the two. I think data, we are obviously far away from GDPR, but we need to be prepared. It's not about exploiting data, but actually permission. How do you do something with the permission of the consumer becomes important. And obviously technology from centralized to distributed is already happening. Interestingly, on reach, what I mean by concentrated to distributed is today most of the startups have one channel which they do very well. Somebody may be doing direct very well, somebody may be doing Amazon or Flipkart or X or Y very well. How to handle multi-channel, how to handle that complexity is going to be critical to long-term success, because in a market like India, you can't be single channel and hope to scale. And then from an operation perspective, from the brilliance of the founder, how do you make it more process enabled? And finally, and I know my time's just up, ideas are cheap, how do you get to execution, right? So literally the last word is around execution. I think, this is the one page which I would leave on, because to my mind, the success of India startup story is if we make this transition from to properly. Thank you.
Mr. Singhi, I would request you to kindly stay back on the stage for the next session. And thank you so much for taking us on a tour of opportunities lying ahead in India. Now to throw some more light on the same topic, India offering a palette of consumers opportunities galore. We're going to have a fireside chat session which will be moderated by Mr. Abhik Singhi, Managing Director and Senior Partner, BCG. And our speaker for the same would be Mr. Kamal Kashyap, Director, Data Management, HPE India. Over to the moderator now.
Hello. So, Kamal, I'm going to pick up from one of the themes that I talked about, and maybe we'll just keep it truly as a conversation, okay? Yeah. So my first question is, obviously there is a lot of opportunity which is there. One of the things which has made it possible is the data infrastructure which is there. And when I say data infrastructure, I'm talking not only about the physical infrastructure, but the entire architecture, whether it's Aadhaar or whether it's UPI or others, which has got both the hardware, software, architecture, everything put together. What's your view on what role has that played, and what role do you think it will play going forward?
Hey, great. And first of all, amazing presentation, Abhik, and great insights. And I took a lot of notes and a few pictures as well, and I'm sure I'm going to use a few of them with your permission in other forums also. But a great question, and I think the keynote today started with Mr. Amitabh Kant talking about that as one of the pillars which has kind of actually enabled as well as accelerated the whole ecosystem in the country, right? Not just the startups, but a whole lot of traditional businesses as well. These digital transformation pillars that the government created, and a lot of them got created outside of the government ecosystem as well, enabled every business to kind of actually adopt the digital transformation and become kind of ubiquitous from that perspective. If you see, data as a fabric is something that everything, any business that we do is the key to that. People call it the new oil and stuff like that. But I'm saying, take simple examples. And during the lockdown, I needed my dad to give his life certificate for the pension to continue, right? And this Aadhaar, the guy comes home, takes your thumb impression, takes about 3.5 minutes, overall process. And all you got to do is click a few buttons on your phone, he shows up, and this happens. Imagine this same thing 10 years back, right? And or maybe even a couple of years back. And this would have involved like half a day of going to a branch and doing the transaction and stuff like that. If you just look at the ecosystems, and you talked about the fintech numbers and stuff like that, how many of them are actually getting enabled purely on the way the UPI has created the infrastructure, allowing the merchants and the payment banks and the wallets to talk to each other. I'm sure all of us remember the days when you were trying to book a train ticket on IRCTC and you will go from one option to the other here. And that has become actually a huge differentiator, because if the transaction doesn't go in the first few seconds, you are bound to switch on to the next option which is there on the app, right? You're not going to stick around and try it one more time. And that actually is going to stay and continue, and people like us and the generation thereafter is going to get even more tuned towards instant gratification, right? And so you're not going to wait around. In the availability of data, your ability as an organization, as a business or an ecosystem to leverage this structure which has been created, and the opportunities that it provides to all of us, and whoever can think of the ways to leverage, to harness, to create a business out of it, is going to be amazing and endless.
And what is more difficult there? Is it the physical infrastructure, or is it the architecture per se?
I think it's the architecture, right? Physical infrastructure, there's been the stage that we are in the country, a lot of physical infrastructure has been created, and I'm sure as technologies emerge, and believe me, there's going to be new technology every day which is going to come out. Just from the business that I come from, you started with spinning drives, then you went to SSDs, now you're at NVMEs, and I can rattle off the statistics of how many petabytes, zettabytes of data that gets created every day. But the fact is that the ability to harness it is going to depend on how you architect your data flow. And especially, there are classical organizations who have grown a period of time, and they were focusing on the core, which was like the transaction system, a core banking or an ERP. And then they started slowly digitizing the other facets of their operations, maybe getting into the consumer or the supplier and trying to see a view of the data flow and stuff like that. But for a startup, it's kind of a lot more easier because they're starting today. When they're starting, they're already having a digital platform, and they possibly have a view of the data from the time it's kind of created to the time it's kind of archived. But have they made a platform which is going to not land them in the same problem that some of the traditional enterprises got into? They had all the data. A classical organization, let's say a manufacturing, they had all the data. They knew the suppliers, they knew this thing, but they never had a single view. They had no idea how the data was flowing across the organization and hence how to leverage it. And especially we saw, and some of the speakers talked about it during the pandemic itself, when they realized that it's no longer that you can send somebody to office and bring the file and start moving or access the system which already has the data, right?
So it's interesting, and we have quite a few startups here. One of the things I have always found as the most difficult thing to do is to get a incumbent organization's legacy data converted into something usable, while startups who are starting with a clean sheet actually have the ability to think about data differently. The question I would have, and this is the last question I will ask you, and then we can open it for you asking me as well. The question I have is, as startups think about creating their data structures today, how do they build in the flexibility so they don't land up in the same soup, right, which today's legacy incumbent companies have done? So how to not become, on how not to have the disadvantages of today's incumbent 5 years, 10 years down the line.
By the way, we love the data problem, right? We get a lot more to sell if there are those problems, right? But the fact is, and a lot of these traditional organizations are, if you go and ask a CIO there or the CEO, how many copies of the data you have? Is this data relevant? Is it important from a business perspective or a compliance or a security perspective? They possibly will not be able to give you a very crisp answer. The advantages the startups have is that they're starting with all data being digital, hopefully. But the challenges that they have are no different from what a classical organization has. Because the environment is going to get tougher and tougher, and you alluded to it in your conversation that GDPR as well as a whole lot of regulatory environment enforcements, irrespective of which segment that you operate in. If you're fintech, then it's kind of very obvious, but if you are a consumer organization, then also you're going to have a lot of liability around the consumer data that you hold and stuff like that. And then there is also a question of the legal requirements, the security aspect of it and stuff like that. So when you're creating the whole digital map of your business, that is where the data flow that you account for becomes really key. And hence, and that's what we're good at and that's what we advise at, is that if you create a fabric that will allow you to be small, but also compliant and cognizant of all these things that you need to be ticking off or actually be wanting to leverage. So how do I make it available to the data scientist when he needs it, and not maybe a week down the line when the whole consumer situation is kind of irrelevant? How do I make it available to just my call center guy who's trying to process an insurance quote or things like that? And that fabric, how you architect and create, is going to be really, really important, because you, as a startup, you would want to plan for a 10x growth or a 20x growth. So the infrastructure which I create today, how does it actually enable me to take that leap? How do I learn from all the insights that you talked about? Because a lot of myths that you talked about are actually something that at least some of them I believed in till the time you threw data at me, right? And that had nothing that I could refute on, because those are hard numbers. And that's what we will need to create a fabric. And just a little bit of ad, which is, we talked about Green Lake here, and you see that written in the placards. it allows you to kind of establish that in a very, very concise capsule fashion, and your ability to grow it and leverage it as you are planning for your next leap of 10x, 100x, 1000x, whatever it be.
Excellent. So, just changing the flow of questions, if there is anything that you want to question me on.
I have a long list, but let me start.
Smaller is better.
So let me start with the one that's been bugging me, and then in the context of startups, you talked about that you see the glass as more than half full. But there is a part which is not possibly full, and I've been trying to figure out what is that, the dark side of the startup reality today. So some thoughts.
So I think, to my mind, there are probably 3 big risks which are there. I think the first is, the last page that I put up, the from to, which was there. I think the risk is people stay on the from side and don't move to the to. I think that's the one big risk that I see. I think the second is actually talent. I see that as a big, probably the single biggest constraint which is there is around talent. I think if we are not able to find a situation where we can actually skill enough number of people, I think there will be a big problem. And to my mind, that's the single biggest problem which is there. And third, and maybe the likelihood of that is lower, but I think the events of the last few weeks have taught us that geopolitical events, black swan events, are actually not as black swan as we thought. And one of the potential things which could happen is, is there a flight to safety of capital? So, capital which I think for the last few years, everybody has been taking for granted, actually could be an issue. I mean, the probability is probably low, but the first two, I think, are higher probability events.
No, that's so true. And but let me just pick up on the point that you mentioned on talent, and we'll possibly come back to Black Swan as well if there's time. And coincidentally, I was in a forum of startups, a roundtable discussion a couple of days back, but it was a technology-focused one. And everybody talked about the technology talent issue that they're facing. And it's surprising in a country of 1 billion people and the tech powerhouse of the world, right? The top 3 tech powerhouses are actually based out of India, right? They're headquartered in India. We're still facing the talent. But I think from your point of view, when you mention talent, the issue is broader and not just the technology talent. So what pieces you think are missing, and is there any idea out of that people could execute on?
So 2 factoids. I was in the 70s. If you graduated in the US, there was a probability that you will have 2.7 jobs in your lifetime. Okay. In the 90s, if you graduated in the US, the probability is you will have somewhere around 6 jobs in your lifetime. There is a study which has been done that if you're graduating in the 2020s, you will possibly have 3 different careers, not jobs, right? And I think, to my mind, the entire piece is actually not about the one-time skilling, which is where I think a lot of effort is going, right? How do you do a one-time skilling? But how do you get, and I think we're getting there, how do you get a culture where, you fail, that's fine, you learn, you move on. And I think that's something which just culturally we are probably not yet wired to do, but that is something to be done. The second thing was interesting. I was talking to the CEO of a FMCG company today, and he was saying one of our largest distributors in Bombay decided to quit. And he said, my son doesn't want to do this job. Very understandable, right? He wants to do something. And he said, I was worried because I thought, what will happen? He said there were probably 10 other people having the hunger and the willingness to take that role, right? So I think the good thing is we have the law of large numbers. I think the worry is we don't have the capacity right now to train skill at the scale. And I think that's, that's the one place where I agree with the previous speaker, which I think the entire opportunity in digital skilling, education, and I know she was referring to kids, but I think just on an absolute basis, I think that's massive.
Oh, and I thought we had one too many startups in the Edtech already, so that's an eye-opener for sure. So besides Edtech or the education segment, because you talked about the number of startups in various micro verticals, Fintech and e-commerce and the percentages. Where do you think is the opportunity where it still exists and possibly there aren't as many people coming up to take that problem solving that are there?
So, the measure or metric I look at is where do people spend their time and where do people spend their money? And I find that people, it moves first from where do people spend time and then where do people spend money. I actually think there is a massive opportunity in the entire food space, which is there. We spend about 30% of the total expenditure. So, hundreds of billions of dollars on food. The amount of wastage which is there is humongous across the chain, right? Which is there. It's the single largest category. It is the place where people are willing to spend more. I think that is the one place, and it's a tough problem to solve. So therefore, those who solve it, I think will make a lot of money. But it is a difficult problem to solve. And my personal view is it's actually a coordination problem. That's why it's difficult to solve. Startups are great at solving problems which they can solve by themselves. Where it requires coordination across multiple different people, I think it's a difficult one for them to solve. Should we just take, I know we have 3.5 minutes. If there is any,
It goes back to your presentation. Right? So you talked about the target group in 35 and above. If the target group is 35 and above, do they also have different behaviors with respect to e-commerce and kind of digital interactions relative to the younger generation, as it were? Any insights on that at all?
Yeah. So interestingly, yes. So we had coined a phrase that the first 100 million users were basically metro male millionaire, and everybody after that, changed the paradigm. We found it interesting. Behavior was not as much determined by age, but the number of years that people had been online. So, so to your question, actually a 35-year plus male in Mumbai, if he actually had been online for 2 years, it's more likely he would behave like a 22-year girl, let's say from Ajmer, who had also been online for 2 years. So it was just the familiarity with the medium.
So the maturity of the journey, so to say.
That was one. The second was actually the other single bigger driver was 2 moments of truth in many of the digital transaction. One is when you are at the interface, and one when the physical transaction finishes. A bad experience at either of those basically, threw the consumer off.
Thank you.
I think we can save 1.4
minutes.
Thank you.
Thank you. Thank you so much, Mr. Kamal, for sharing your very valuable insights with us. And thank you so much, Mr. Singhi, for taking this entire flow of topics so well, dividing it considerably between the keynote and fireside chat. All right, well, on that note, I have one question for the audience. Could anyone here tell me the purpose of organizing a summit, or any summit, let's say, not just this one? Anyone? Please. Coffee. Okay, agreed. What else? You can think of something. I'm sure you'll come up with something. I'll tell you. It's networking. We all are gathered here to network with each other. So we will now break for our networking break, and I would humbly request you to kindly exchange at least 5 business cards with each other, because see, that is the purpose of organizing a summit, so that we can network with each other. All right? And post that, we will have our next panel discussion of the day. So I will see you back in the same ballroom in the next 15 minutes. Thank you.
It wasn't long ago that catching a ride like this, or accessing every single song in the world like this, or even connecting to your home like this,
Hello.
seemed unimaginable. Kind of like having the cloud experience outside the public cloud. But that experience is here, across all your apps and data, wherever they live, as a service.
We were the first to say the world will be hybrid, and it is.
Just as streaming brought the theater to you, and online shopping brought the entire store to you, HPE is bringing the entire cloud experience to you.
Cloud is not a destination, it is an experience.
Apps and data unified. Clouds, edges, data centers unified. This is more agility, instant insights, faster innovation, data gravity defied. All in one place. One single line of sight. One consistent experience. One direct route to a better next, and the vision to take you further. This is the cloud experience everywhere. This is HPE.
The world around us is changing. Amid this change, we are here for you, helping you find, design, manage, and invest in amazing spaces. We are JLL, the real estate experts.
It wasn't long ago that catching a ride like this, or accessing every single song in the world like this, or even connecting to your home like this,
Hello.
seemed unimaginable. Kind of like having the cloud experience outside the public cloud. But that experience is here, across all your apps and data, wherever they live, as a service.
We were the first to say the world will be hybrid, and it is.
Just as streaming brought the theater to you, and online shopping brought the entire store to you, HPE is bringing the entire cloud experience to you.
Cloud is not a destination, it is an experience.
Apps and data unified. Clouds, edges, data centers unified. This is more agility, instant insights, faster innovation, data gravity defied. All in one place. One single line of sight. One consistent experience. One direct route to a better next and the vision to take you further. This is the cloud experience everywhere. This is HPE.
The world around us is changing. Amid this change, we are here for you, helping you find, design, manage, and invest in amazing spaces. We are JLL, the real estate experts.
Welcome back, everyone, to Mint Startup Icon Awards 2022. And we really hope that all of you had a really great networking session. Well, now let's begin the next round of discussion on challenge of scaling in the times of talent scarcity. Here we will discuss that what all preparation and measures scaling leaders can take to retain the talent in this competitive market. To shed some more light on this, we would invite our experts on stage. Please join me in welcoming the next panel. Our panelist would be Mr. Arjun Mohan, CEO, Upgrad. Mr. Bipin Preet Singh, co-founder, MD, and CEO, MobiKwik. And our moderator for the same would be Mr. Shalil Gupta, CBO, Mosaic Digital. Over to Mr. Shalil now.
Good evening, everybody. Should we start the same rigor exercise? It's only with Jaideep's voice I can hear. Okay, let me try once again. Good evening, everybody. Ladies are very good here. Gents are all lazy here. Okay. But I think we have a very interesting topic, guys, frankly speaking. One, we're talking about scale, and then we're talking about talent. Can you see talent? Guys, both of you? Look at me. I just resume was on the morning, in the afternoon. Okay. You know, we have 1.3 billion people, and time and again, I went across to 250 startups, asked this question, what's your biggest problem today to scale? You know, unanimously 100% of the startup founders have said to me that it is the talent. Now, two sides of the coin. One, you know, both of you are a tech sort of a startup, right? Edtech and Fintech and so. So technology plays a very important role. You use technology to scale. Now, you are saying that, you know, talent is scarcity and I have to scale. It's counterintuitive. This is one side of the coin. It's really counterintuitive because technology, I am going to use it to scale it. I mean, why do I really need so many talented people in? The second actually side of the coin is, what is this talent we are looking at? Why are we not able to find it? I mean, are we looking at something else or we really, it's a generic word being used across, yeah, we don't have people enough, right? So, frank answer, but first one first, technology has to scale. Why do you need talent, right? I'll start with you, Arjun.
Yeah, so first of all, thank you so much thank you, Mint, for calling me here. It's a great opportunity. And an interesting topic, as he rightly said, for any organization today, the problem is talent. And it's a very loosely defined term. I think you can't, it's not that the number of people applying for a job is a problem today. It's the fit, finally, which makes a problem here, right? So let me first answer the first question. We are all tech. We have a tail of tech. So we are supposed to be doing things through tech. Then why do we need people? You need people to at least develop the tech. That's one. Second is, see, not everything can be done in tech. And I'll talk more about my segment, edutech or edtech, whatever you want to call it. Finally, it's about learning and teaching. You can't get everything done through technology. There is a human interfacing which always happens. Specifically to talk about Upgrad, we do online courses, degrees, diplomas, certificates, all these things. And largely, my understanding of education is it's just not about downloading content with people. It is about developing that discipline. And generally, learners are not self-motivated. You need someone to prod them. Technology can only do it till a point. After that, you need services to add on to this. So although we are a tech-driven company, our success is completely on the talent and the employees we have at every level. People who are creating content, the teachers, the lecturers, the engineers, the acquisition engine, so on and so forth. So I think this question, talent is the biggest problem. If you're a tech company or a non-tech company, that's always going to be there. Finally, you are a people company. And if you don't solve for it, that's going to be there. We'll talk more about why are we not able to solve for it, but this will be my starting statement.
Yeah, but if I look at WhatsApp, it's 19 people with $19 billion, each getting $1 billion. I'm very good with this here. Where do we need talent?
Not everyone can find the right Zuckerberg at the right time. That's the problem.
That's why I said, look at me. Okay, guys. Vipin, over to you, man.
Yeah, so first of all, thank you for inviting me for this event. And it's a very good topic that we are talking about, and it's very relevant, especially, in the times of COVID and in the times that we live in, especially, in the kind of technology era that we are living in. Technology is taking over everything that we are doing, right? But we should be fortunate and thankful that it can't take over everything, because then you and I and everybody will be out of job. So I think AI has not yet reached a level, thankfully, where they can start writing news articles. I mean, some of them have, and or start writing code.
Yeah. I'm just fearing editor is not here. Thank God.
So I think, as far as India is concerned, and this is very specific to India. Of course, it's happening all over the world. Is that in India, the India that we live in, that most of the people in this room live in, is a very different world compared to the demographic dividend that we have in terms of number of people. Last week I was flying to Lucknow. I flew to Lucknow, and like I was at meetings and going through the city, and that's even a state capital. You go beyond that, right? People are dying for getting a government job, which pays 10,000 rupees for the rest of the life. So what's happened is that there is a very small pool of people who have over the past few years benefited from this technology boom. And many of them are engineers or in the industries like Fintech, Edtech, e-commerce, like content, news, everything, right? It's a very small world. And I would imagine the total number of people would not be even more than 4-5 million. But you look at outside that, the number of unemployed people that we have in this country. So I see a great divide. And the fact that we are saying that talent is scarce is because we are not able to today bridge that divide. Today, there is so much billions of dollars of capital is flowing in. Unicorns, this, that, is India is going to have the largest number of unicorns this year. What is the problem in, hiring people? Like, you have so much money, you pay them and hire. But the problem is how much you are going to pay, right? Because every 6 months, you get 100% jump, right? And this is, I'm not joking, this is what is happening.
And you are giving that?
Sorry, we have a different strategy and we will talk
guys,
about it.
I think there is a mass resumes coming across to you guys, man.
But the point that I was making is, the fact is that technology today is an enabler. You need people to move the technology era forward in a country like India. And technology can provide a lot of employment, can employ a lot of talent. But today we are not there. Today it is appearing to be scarce because it's not trained talent.
Got it. The second part of the question, let's say two sides of the coin, and it's a very serious discussion I want to have, because many a times I find CEO going to the board and board asking a question, why is this not happening? 9 out of the 10 times, boss, we don't have a talent, right? That's the answer we give it to the board. We need people, we don't have talent, we are delayed, we are hiring. What are we looking at it? What is that specifically a CEO is looking at building a talented organization? How do we look at that? What are your viewpoints? You're practitioners yourself, right? There are textbook definitions that exist. But I think practitioner's view is most important for us. Arjun.
Yeah, so I'll start with what I look at when I typically hire people. And I hire it for people reporting to me. So obviously I'll hire for a senior level. Fundamentally, what I've seen as a trend across is that anybody you interview, and again, I'm not trying to talk about Indian talent, I'm talking about typically the talent you get across the globe, be it US, Europe, wherever it is. These people are hardwired to solve for a task given to them. So if I hire an engineer today, I tell him, see, this front end is not working for me. I want you to redo it. Okay, tell the product manager to give me the rec. I will redo it. He knows React. He will know all the front-end languages. I'm just going a little tech here. He'll do it. But the problem is, in today's world, when we are moving at light speed, that is not enough. You get a change in the technology every 6 months today. If you don't have your engineer going out and learning about what is new himself or herself, the person is going to be obviated and you'll have to rewrite your entire code in some time. So what I specifically look, obviously the hard skills are important, but it's more about this attitude of continuous learning. If I present a problem to this person, will this person go out, read about what is happening around? Or will that person give me a solution which is just about solving for the requisition I have given? Because most of the times, even you are not sure about the requisition when you write it. So this is the only thing I look at. Whether this person has an attitude to learn, will he or she be able to solve for this problem, thinking about what more can happen out of it in time. So that's where I find scarcity.
Absolutely, I agree. So that is more on a softer skill side, which becomes more an aptitude, attitude, the capacity for a person to learn better. I want to come back to you, but Vipin, want to hear your viewpoints also.
Yeah, my view on this is very simple. Yeah, anybody who complains to their board that you can't find talent is lazy. I mean, and maybe I've also done in the past. I don't recall, but I would not say that. Because the thing is that really, I mean, India produces some of the smartest people, smartest engineers in largest volume possible, English speaking. So if we can't find the right talent from there and groom them, then God save us, really. So my point there is very, very simple. Like I said earlier, there is a huge gap between people who can do the job today versus those who are capable of doing it tomorrow. And that bridge needs to be, taken to the next level. And how you do it, some people are motivated, self-motivated, like he was saying. But to do it at a very large level, at an industry level or a country level, means, basically investment in training and development.
Sure.
And so at least from where I come, the strategy I have found which works very well is that, find people who are young and younger and youngest, and groom them, train them, invest in them, and let them become rock stars. And we have several examples of such rock stars in our own company where, there was an intern who we hired who today is an engineering manager. His next stepping stone is going to be a VP in 6 years, right? And, he's doing as well as somebody who has 14, 15 years of experience in the industry. The only reason he's gotten there is because of the fact that, we invested in him early. And there are so many examples of people who are passing out of colleges. And I'm not even talking about IITs, by the way. I am from IIT, but I don't hire from IITs. I hire from all the colleges outside of IITs, including NSIT.
Good. I'm not from IIT.
Yeah. And so there, I've found that there is so much talent, so many smart people. Yeah, we are a billion population. I mean, of course, we have smart people within us. It's just about finding them and training them and getting them aligned to a mission. And, then things are fine.
I'll tell you on a lighter note, there could be a strategic problem. Okay. We had some 2016, 947 startups approximately registered. Today we have 65,000 plus startups registered. And I've heard this, that the one CEO founder has agreed to another CEO founder that I'm not going to hire from your company. It's like a norm, secret pact, non-poaching is there, right? I mean, strategically, you will create a market issue, right?
It's illegal, by the way.
See, strategically, you will create a market issue. Hey, Vipin is saying that I'm not going to hire from Arjun. Arjun is saying I'm not going to hire from Vipin. Where will we go? Right?
No, it's illegal. So you can't have such poaching practices. I mean, if somebody is having it confidentially also, it's actually illegal.
No, that's
in the country.
That's why I said on the lighter side. But second thought which comes into my mind is usually, if you look at a talent today, you're looking at an hour of an interview or maybe a couple of rounds of discussions happening. You're taking aptitude, attitude, then HR rounds happening. Any new practice you've brought in to identify? Because I don't think, I can identify a talent in 1 hour interview. Frank, I can tell you my capability. But I'm sure we have always find new ways. You people are brilliant, intelligent people. I'm sure I want to learn something from you and my audience as well. So what's the new you have brought in?
Yeah, so again, to take our example. So first of all, before going there, I just want to put this thing. See, we keep talking about this talent crunch. It's so much in the news. All startups are talking about it. But have you ever heard an HUL or Tata's talking about it? Now, that's a point everyone should ponder on. Right, so I'll tell you a few things which I have been trying to implement at Upgrad. So first of all, one advantage we have is we are also India's largest training platform. So we have a regular flow of CVs of people who are coming and training with us. So it helps us a lot. So that's why I said that my final call is on the softer part of it, because I get people who are already hard trained on it. What I have done in terms of the interviewing processes, first of all, one part I have continuously seen is that people are not well prepared for the interview. And it's very normal today, right? You get 10 opportunities. Time come like it's like our IIM interview, right? It starts in the morning, day 0, and by the time if you are unfortunate enough to not get an offer till 12 a.m., you would have at least attended 20 interviews. When can you expect that guy to go and get prepared for? So that's how it has become. So what we have done at least is that, because we are very selective about hiring, we ask people to do an assignment, and it's a proper case which they will face in their day-to-day job, which will require them to study a bit about the role, about the company, so on and so forth. And there are at least 3 rounds, where one of the round is a written round. So we also test a person's written skill. What I've seen is that these days talking skills is something which you find a lot, but the real depth of a person comes out in this. So based on all these aspects, we have created a mechanism which have been fairly working out well for us.
What's your hit ratio? 7 out of 10? 8 out of 10?
Conversion?
Yeah.
No, I can't reveal that, sorry.
Bipin, over to you, the same question. Any new practices you will like to bring?
No, I think, one of the things that I already mentioned is invest in young talent as much as possible. I think that's something that we have been doing, and given what has happened in the last 2-3 years, we have actually resolved to do it even more. Right? This year, for example, we are hiring at least 50 plus people straight from campus who are going to join in the next couple of months.
Excellent.
So I think that's one clear way, because the pool that is there today, that is experienced today with the number of companies that are vying for talent, the better strategy is for anybody who is to expand the pool, right? That way you can train people, you can get people into your culture and motivate them towards the mission that is working towards your company. And I think that is another important point, which is that, yeah, sure, BMW bikes and all those things also work well, but it's far better if people are aligned to your mission long term and are invested in the company's success, right? So some good things are happening, like, for example, in startups, the ESOP culture has become very mainstream now. There are people who are making money, even in private companies, even in our company, people have sold ESOPs and made money beyond the salary. So that becomes like a motivation for somebody to not just stick around, but actually ensure that the company succeeds. So that has been great. The second thing is also, I think, there has to be a general high level of trust in an organization, which startups, unfortunately, haven't invested in much, right? Like he was talking about the HULs and the, and the Tatas, which they have over several years. That's because, of the news that you hear about hiring, firing, hiring. Whenever there is funding, hiring. Whenever there is, downturn, there is firing. So I think that's one thing that we have tried to steer away from. Like for example, when COVID happened, right, we took an active call that no matter what happens, we will not lay off a single employee. And we did that. We didn't fire a single person. Whoever left voluntarily left, but otherwise we didn't have to let anybody go like that. So I think, building the business the right way with right-sized sort of people set ensures that, you don't have to fire people. And that creates, again, a problem in the long term because you build an image of startups and especially technology startups as being, as being fly by night, right? That you hire and then you fire. So I think these are some of the things which are very commonsensical that we have done, and they have, worked well for us.
No, very good. I must say, if I look at HUL, P&Gs and Cokes and Pepsis of the world, they are not job growth market. Not at all. They are replacement market. I mean, people would leave, there would be a replacement available, then they have their own machinery of replacing the people. But when I look at startups like yourself, when I look at startups in this room, they are job growth market. You create new jobs in the market. My hats off to you guys for this. Because we need you more on more startups to come, more and more jobs to be created that way. And then we can be better off as a country altogether. Bipin, you brought a sort of an elephant in the room when you said culture, right? So many a times, I find a talent, and I've heard, it's not culturally fit into organization. I said, very good, yeah. I mean, then HR will say, oh man, this guy is amazing. Skill, talent, amazing. But yeah, he's not fitting into the culture of the organization. Now this elephant, I need to decode it. I am tired of listening to this word called culture. What is this culture? Where, this textbook definitions exist. I don't want to learn that. I think practitioners view from a perspective of what do you really mean by culture? Let's go a little deeper, understand it, and maybe there's something for us to learn. Arjun.
Yeah, so interesting question and a very obvious question. This is something which I have also thought a lot. I mean, once my chairman told me that you have changed the culture of the organization a lot after you came in. Okay, from what it was earlier and what it is today, it's very different. So I have always thought about it. So the answer I got is that if you can define what the organization stands for and how that standing for is operationalized in one or two words, that's what culture is. That's how I define it. And this asking if you are fit for the culture is something which I have never really understood. Because if a person applies for an organization itself, I'm sure that there's something about the organization which he or she got excited about. In an hour of interview, how are you going to understand that if person is ready for not or not? So I don't really, I'm not a big fan of that.
Einstein type genius.
To know that, right?
To get that 1 hour talent and culture fitment and what not, man.
Yeah, absolutely. So which is why I believe the process of hiring should be intensive. It's no longer the time when you get like 5 minutes with an individual when you go to campus. Even the campus hirings are happening online now. And there are brilliant tools available. There are tools available to really assess this individual. So what I have always tried to do is to use these tools. And we do all our hiring online. We think that that is the best way to do, and we think that is the future. So we don't really spend time going to a Healthtech to visit the students in IIM Healthtech. We would prefer to do it in 1 hour online. And we have our own tools to really see how good this person is for the role we are taking that person. So I think the only way you should, at least what we do and what I would suggest is have an intense process. There is no dearth of people who are applying for jobs. There are dearth of people who are well trained for it and maybe the right fit, the talent you speak about. So you have to invest in it, invest your time to find it, and use the tools to do the right filtration. And that's when you will get culturally fit, quote unquote.
Quote unquote. Okay. Vipin.
Yeah, I've been trying to catch this animal called culture for the last 10 years.
Has anybody got hold of culture?
Haven't figured out whether it's an elephant or a tiger or a dog or whatever it is. But I have learned only of very few things which at least could be useful. One thing is, I think culture is what basically teams do together. Okay, it's as simple as that. And it could be anything. You have a culture in an office, in a government office that you go, you have a culture in a, let's say, some Tata Group company, and you have a culture in a startup, right? It is what teams do together is what is defined as culture. And from that point of view, I think startups are fast, startups are high performance, and at the same time, startups should ensure that the highest level of ethics and integrity are maintained, right? So from our point of view, that's all, you know, we look at, and everything else is your own personality trait, because no two individuals are same. And as long as all the people agree with these kind of cultural traits and agree to work together like this, then I think you don't have to, I think one of the things that is talked about a lot, and especially if you're subscribing to courses from HBR and other places, is a lot of long list of things, do's, don'ts, etc. I have gone through most of them. They are not really, very practical from a point of view, at least not in the Indian context. And so I believe that what is practical is that you actually have a high level of trust in your teams, and let them do what they want to do, but give them the right mission, motivate them, and that becomes your culture. And I could go on and on, but yeah.
No, I think yes. I mean, I have reached to a conclusion that culture is alien. It is not on this planet. But we live with this every day. It's sort of a feeling inside. It's sort of a, bringing the human algorithms out, which fits into our environment. I think that's what we are talking about. But time is up. I want to continue more, but I think, we have to summarize it. What I've learned from you guys is that think differently. Scale is a function of talent, and it's also a function of culture. Function of talent is an outside-in perspective. Function of culture is actually inside-out perspective. Find balance between function of talent and function of culture. I think probably most of the organization will start scaling. I think that's a fair level of discussion and summarization. With this, thank you very much for sharing. We'll figure out somewhere the animal we'll find it out, culture animal. But it's fantastic to hear both of you coming here, joining us. It's an honor. It's a pleasure for us. And thank you for the time today. I'm handing it back over to you.
Thank you.
Check. Thank you so much to all the panelists for such a wonderful and nuanced discussion. Well, I'm sure that this discussion has given some really valuable insights to all the startups, in conducting their hiring process. And definitely it has enhanced a feeling of team spirit here. Thank you so much for being with us here today. Meanwhile, we are setting the stage. I have 2 questions to our audience. Number 1, we just had the networking break. Did you all have your coffee? Somebody there said that, yeah, we come to the summits for the coffee. So did you all have your coffee? Yes, great, perfect. But the bigger question, did you all exchange the business cards here? Yes? Can I hear a yes? Perfect, perfect. So half of our purpose is already accomplished here. My second question to all of you, are you all tweeting live with us? Yes? Can I see the hands, the people who have tweeted live with us? Perfect. 1, 2, okay. Somebody from here? All right. Well, see, we all have our smartphones with us. So you can go to your social media, you can go to your Twitter, and you can tweet, by tagging us at LiveMint, at Tech Circle India, and you can mention the hashtag Mint Startup Icon 2022. All right. Well, on that note, we will quickly move on to our next fireside chat session on the topic, treading the pitfalls of driving value for both startups and limited partners. Well, India is receiving investment from venture capital firms from all around the world. every VC is wanting to land the next big unicorn. But one needs to be cognizant of all the success metrics, including valuation before investing. So what's the blueprint of the future for VCs to avoid pitfalls? Let's hold that thought for a moment and let me invite on stage our next speaker. Along with the moderator, I would humbly request Ms. Nupur Garg, founder, WinPE, to kindly join us up on stage. And along with her, let's welcome Mr. Leslie De Monte, Executive Editor, VC Circle. Over to Mr. Leslie now.
Can you hear me? Yeah. Okay, great. So we have actually been having a lovely discussion before this, and I think all of us were listening very intently to the cultural part of it. And I think we're going to speak a little more about the culture, because I think when it comes to gender diversity, as far as women on the board levels, women in leadership positions, that's exactly what the forte of Nupur is. But very interestingly, I mean, we started with a topic as to what exactly is happening in the ecosystem. So first, we'll just have a broad question more on the ecosystem part of it, because when we are talking about Ps and VCs, we can't obviously forget the LPs, the guys, the folks with the money. And Nupur advises LPs on how exactly they should be investing, what are the kind of pitfalls they should be looking. And as I think in the intro we said, every VC is looking out for the next unicorn. But Nupur, spotting the next unicorn is easier said than done. I mean, it's a tricky area as of now. We are sort of dealing with, I mean, I would dare say some valuations that are a little suspect. But at the same time, there's tremendous amount of innovation and entrepreneurship that's happening in the ecosystem. So when you're advising LPs, what exactly do you tell them? How tricky is the situation? How should they be navigating it?
Thank you, Leslie. Before I answer that question, let me say some nice things. So firstly, I think the ecosystem has really grown tremendously. I think it's very heartening to see how the Indian VCP ecosystem looks today vis-a-vis how it looked, say, 10 years back, where global LPs had written off India as an investing destination. And today we have a lot of funds in carry, you know, with DPIs which are in excess of 2x, and you know, so all of that is great. And I think lots of very, very talented entrepreneurs are coming, and a lot of successful companies are being formed. So I think let's not forget that a lot of development and a lot of growth and economic growth has happened. But as an LP, you know, there are some things that are sort of still to worry about. We were talking about this. The LP's investment is a very, very illiquid investment. For 10 years, you're completely locked in. And you really don't have any rights, you just have remedies. So it becomes imperative that one does the due diligence extremely consciously and extremely carefully. And when you're doing diligence, the biggest question is, are these valuations sustainable? Are these successes replicable? Are these successes repeatable? And is the boom attributable to real fundamental factors which can be expected to last? Can you say a fund manager had something to do with it? Can you say the ecosystem had something to do with it? Or is it more a function of, say, the timing, more a function of the sentiment? For example, last year, the public markets were a great option for many companies that wanted to list. So one wants to understand if this kind of a performance can be seen in another 5 years, in another 7 years. And that, I think, is still a question that remains to be answered.
But won't this get trickier in a sense, especially when you're dealing with new age technology companies? Like, say, when you're advising LPs and the PVCs are basically looking at the new age companies. Worse still if they're looking at Web3, the metaverse that we were discussing a time back. These are like concepts that are just picking up. They're in their infancy. Perhaps they do not show, the metrics are a little unclear. the return on investment is out of question because I think most of the startups are still in the revenue generating mode rather than talking about profitability. So are these, how do you deal with these kind of situations?
It's very tricky. And if I can be very honest, most LPs do not understand the technology the way GPs do, right? So you have LPs who are really relying on the fund manager's ability to understand the technology, understand the opportunity, understand whether the entrepreneur has the ability to execute on the business idea or not. So it becomes, it's quite complex and nuanced, if I can say that. And I think LPs like to believe that what they do is very sophisticated and rather difficult, but it is all about betting on people. I think the opportunity is tremendous. India is so connected with global trends and developments in technology that with the right fund manager who's able to back the right team and the right idea and help it scale, because sometimes it is also about having the right partner. You could have a great idea and you could have a great team, but if you don't have the right partner, you could have your own challenges. But you know, the opportunity to find that combination is very exciting for LPs.
I think a very valid point that you have made out there, and I think you have been pretty honest about it. I can see some faces smiling in the audience, especially Jaideep, who is having a very broad smile about it. I shall get back to you, Jaideep, on that. But for now, Nupur, you're also on the investment committees of many LPs. So do you think that from an LP point of view, what's the value that gender diversity brings to the table?
I'll continue in the same vein as my earlier response and be absolutely candid here. I think by and large, we have a huge amount of research and report that has established that there is a tangible financial upside with a gender balance team, from 18% higher IRR to 25% higher MOICs. I mean, that data exists. But in practice, it is something that LPs have found very difficult to bring to the table and really bring into the conversation in a real way. Because if you think about it, LPs are not able to tell a fund manager, make your investments in a certain way. That is the discretion a fund manager has. So I know of LPs who sort of circle around the issue and maybe will require a fund manager to have an anti-sexual harassment training for all of their team members as the action plan to be completed over a period of 4 years. Now I say we need to do better than that, right? Or you would have LPs who say, please hire a woman, and you would see the fund manager hire, with all due respect, somebody in a non-investment role. It is great, it is a beginning, but ultimately you need to bring diversity on all parts of your functions, right? I mean, you need women as investors as well to really reap the financial benefits of gender balance.
So clearly, of course, you require women on the board, you require women in leadership positions. I think we all agree on that. But what are the kind of proactive measures that the ecosystem is taking at this point in time? Do you think they are sufficient? I mean, obviously, let's not get into the sufficient part of it. Nothing is ever sufficient. But at least, are you happy with the initial measures that are being taken, or would you be able to suggest more concrete measures?
So I think for starters, you know, the 2X collaborative is doing a lot of work in helping fund managers think about how to integrate diversity as a lens when you're making an investment. And it's pretty simple, it's pretty easy. You've got different criteria. You can use any of the criteria. It's you know, it's women in the workforce, it's women in leadership, it's women as shareholders, different factors. So that, I think, is giving some clarity to fund managers as to how, in a very practical way, you can start thinking about including women when you're making investment decisions. At WinP, I think what has really excited us is the huge action and the huge momentum we have seen with WinP member firms in changing how they are hiring, in changing how they are giving, you know, mandates to headhunting firms in sort of starting to measure, starting to report, and just taking the conversation to their portfolio companies. And I think that is something that will take the industry to the next level, not only in terms of culture that we spoke about in the last panel, but also in terms of financial performance.
So from a technology point of view, are you also from a hiring, since we're talking specifically about hiring, a lot of biases creep in. We know that in the manual part. Even algorithmically, a lot of biases creep in, even if you're trying to use AI tools. So are you encouraging these kind of things like from blind hiring, blind appraisals?
Yes, and this thing about biases creeping in even if you use algorithms is so true, because algorithms are designed by human beings and their own biases get reflected. So what we encourage is very, very basic things. We don't talk about quota because we want to be very respectful for the woman who's ultimately hired. We have to not distract from the fact that she is being hired on merit. So we say just make sure you have a pipeline which is reflective of the talent pool. And we just released a report with BCG, and that report said that at the entry level, the industry has about 40% women, which is very reflective of the talent pool that they hire from if you're looking at consulting and iBanking and even B-school campuses. So, just making sure that your pipeline has enough women statistically improves the probability of you hiring a woman. And I remember this one vacancy I was hiring for, we had 753 applications and 10 women. So just mathematically speaking, how do you make sure that a woman makes it to the shortlist? It's maths here. The other thing, like you said, blind screening, very important, just beats out basic unconscious biases. Just look at a candidate without knowing what that candidate's name is, can be powerful enough.
But also how to, say for instance, whether it's PEVCs, whether it's LPs, whether it's startups, etc. How do you feel that they should be getting the word out? Like, okay, in the sense that, okay, this is a place that encourages women even to get at the senior levels, at the leadership levels. Because I think at the ground levels, you do have a lot of hiring that is being done. But how do you encourage that? Because even if I look at the startup ecosystem now, correct me if I'm wrong, but I do not see too many women as co-founders at this point in time.
You're absolutely right, and I know we've had a lot of data today, but I do want to share this with you. So, there was an IFC report in 2019 which said women in senior levels, 7%, and PVC funding to women-led companies, 7%. There was a report for the US which said women controlling investment decisions, 2.3%, funding to women-led companies, 2.5%. So there's almost like a direct correlation, and again the IFC report says that there is a positive correlation between having women on the investment team and having women in the portfolio. But I think there is also a larger ecosystem issue at play here. The whole societal construct which sort of encourages women to be more inward facing. Networking is not a good thing, right? And when you want to run your own business, you want to be able to reach out to networks and say, can you bounce off this idea? Can you connect me to someone? Do you know an investor? Do you know where I can find a co-founder from? Do you know where I can hire people from? And that ecosystem is more challenging for women. And that, I think, is something that is true across the world.
Great. I think we have... this is too short a time to even discuss these kind of topics. But having said that, I can take a couple of questions. And Jaideep, would you like to ask a question? Because I saw you smiling at that point in time.
I was smiling at that comment about LPs not understanding technology. See, LPs are getting better at understanding technology. I think as the VC ecosystem has matured over a period of time, many LPs have also plucked the fruits of the startup boom in the form of cash going back to them. So it's getting better. I think the next challenge that is going to befuddle the LP ecosystem is this creature called Web3, right? Right now, 100% of the people I speak to are still struggling to differentiate between blockchain and Bitcoin. तो अभी क्रिप्टो के आगे बहुत लंबा रास्ता है, right? And absolutely no one understands NFTs and they've gone headlong into it. And I won't even start going into the B2B applications of blockchain, of which there are so many wonderful ones. So it's going to be an exciting time, but you know, it's also a time where over the next 5 to 10 years, value creation is going to happen there. So the LPs who recognize that and are able to understand that, to my mind, they're the ones who are going to really get those MOICs and IRRs they all crave. And Nupur, I'd love to get your thoughts on this. It's a rather long-winded statement, hardly a question.
I think we'll get this offline because I think you have done a lot of batting for LPs.
No, but I absolutely agree with you. But you see, the trick of being a good LP is to find the fund manager who understands Web3. That is how a good LP is successful. Because the LP is going to back more than one fund manager, and you don't need to understand every technology. But as we get deeper and deeper into more complex and more sophisticated technologies, it's not going to be easy for LPs.
But I think we can also end on a real positive note that basically that while we do understand that there are a few women, we'll take it offline because of time constraints. So while there are fewer women than we would want on at leadership positions, but things are improving and hopefully efforts like these will help strengthen the ecosystem. So please give Nupur a big hand.
Thank you, Leslie.
Thank you, Ms. Nupur, for enlightening us with your thoughts and experience. I would request you to kindly stay back for a picture. And thanks to our wonderful moderator, Mr. Leslie, for conducting this outstanding discussion. All right, taking this day forward, we are playing a factoid for our next session. I would request you to kindly have a look. Well, this is going to be another one of the very exciting and interesting sessions, and for the same, our speaker would be Mr. Rajan Singla, Sales Director, Enterprise GTM, HPE Financial Services. Let's welcome our speaker for the session on the stage. Along with the moderator, Ms. Sumedha Bose, Assistant General Manager, Research and Solutions, Mosaic Digital. Can we give a big hand to our speaker and moderator? Thank you.
Welcome. Thanks.
Over to Ms. Sumedha now.
Thanks. Is this working? Yeah. Thanks, Namrata, for the warm welcome, and thanks, Rajan, for joining us here. I think we have a very interesting topic today, and the best is saved for the last,
Surely.
I believe. And we've seen this whole, since morning today, we've seen this whole spurt of different kinds of startups that are doing the rounds and everything. But ESG also, no one doesn't speak about it much,
right.
And that's very, very critical. And to quote certain statistics, 2021 has been a phenomenal year in terms of ESG investments globally. It's actually doubled, okay? However, when it comes to the, the startup fraternity and someone is engaging in ESG, they come under a lot of scrutiny, because they have to prove their value. They have to go that extra mile, So that's the topic today. And before that, when I really move forward, I wish to understand from you, Rajan, that given the COVID parlance that we have just seen, has ESG taken a backseat? Or, because for many it will be considered, luxury investment only to be done when, markets are soaring. So what's your take on the market and how do you view that?
Oh, thank you. So ESG, I've seen, I mean, as we know, ESG is into all these factors governing the social and governance responsibilities of any corporate. So investments are certainly growing. We have seen a lot of investments coming from funds, from corporates into this sector. But it is still growing at a very small base. Though we see a large, I mean, in percentage terms increase, but the base is very small in India. Yes. And it's still very nascent stage from an investment point of view as compared to our global counterparts. So it's still very low as an investment, but it's growing. A lot of focus is coming in Indian corporates and startups to focus on this piece of business.
That's very heartening to know, that's very encouraging. But, you know, if we have to take certain learnings from an organization such as yours, you know, HP, it's also global and it's big, you know, how does one decide how much of ESG investment is the right mix? You know, I think that's the one question that troubles most people because you do too much of it and you run the risk of not achieving your profitability, your numbers, and you do too less and you have regulators eyeing you. So how do you judge that right mix? How does HP approach this, you know, and what all are you doing in this field?
So this is very tricky actually. Does profit comes first or ESG comes first? But what I've seen, and it's need of the hour, that companies start taking ESG as a center of the business and create that entire business model around ESG. ESG is very fundamental to most of the companies these days. And then profit is a subset of your activities. Right? Otherwise, if you see ESG as an overlay, then obviously everything is at cost. So ESG, if you do ESG, then you have to invest funds in ESG that will erode your profitability. But this is not the way to look at it, right? I mean, let's take small example of how we manage our assets. If we come from HP, I mean, how we manage our IT assets. Yes. That is how we advise our client, right? So we, in-house, we have a practice of how assets are disposed of. So assets have a finite life cycle. You use it for 3 years, 4 years, 7 years. But what happens after that? So generally a lot of clients, what they do is, as a token of lip service on ESG, they will say that we dispose it off in an eco-friendly manner, but what happens after that nobody is aware of.
Absolutely.
Right, and they work with a lot of third parties. Obviously third parties, associates are integral part of this line, but they don't focus on this piece. But when we come in as an organization, large organization, and we have in-house practice and a lot of activities that we are doing for our own self on this piece, that from end to end, we know how the assets are disposed of. But before disposing, we very strongly believe in circular economy, that what all kind of these assets can be put back into use and extend the life cycle of the product. Right? I mean, primary usage, somebody might be willing to use it in the enterprise space. But end of the day, these assets still have a useful life cycle. How to extend the life cycle of the product. Right? That is one piece of how we do it. But on the other piece, HP as an organization also works with a lot of our vendors, our suppliers, how we can reduce our greenhouse emissions, how we can extend or improve the performance of our product by saving our products might say more electricity going forward. Energy consumptions are low.
Right.
Right. What kind of packing materials do we use? Or our vendors are managing those stuff. So we work on end-to-end basis, and then we go ahead and put it on our website. That this is what our target is and this is where we are now. And whether we are on track, off track, and then it's in public domain.
Wonderful, wonderful. Yeah. However, Rajan, you beautifully bring me to the next juncture. Like you said, that it's most of the time outsourced. It's third party. Yes. The focus might not be there. And one of the reasons I believe which could be a deterrent is that how do you measure the performance, the efficacy of your ESG efforts? Or your, what is that metric? How do you decide, I am sure many of the startups would want to understand that if they are engaging, everything that gets measured gets delivered, So what is that thing that you achieve? You might be doing better packaging material, you might be saving electricity, but at the end of the day, how do you measure it such that you can bring it to the table and convince your investors that yes, this is how it's going to pan out?
So there are no set metrics as in published ones, right? And it's left to each to its own. But we see going forward, there would be metrics coming in either from the government or regulatory authorities, as in how we are measuring. But generally, in our experience, we have seen that corporates are self-declaring their metrics. Metrics can be in terms of greenhouse emission reductions. It can be in the terms of carbon reduction, or they can go ahead and say net carbon neutral by so and so a year. They put a target on it. And then as I said, I mean, they measure themselves, how they're faring on that target. But regulatory framework perspective, it will come soon. This is what we see. At least may not be in the startup space, but in large corporates, that will definitely come in. And obviously, if startups are using those parameters which are applicable to large organizations, so from investor community point of view, they will definitely look at those startups. That's a preferred one. Right? Because from investor community, whatever we have discussed or our experience, they always see that all the startups who are taking these initiatives and making it as a core of their business instead of just window dressing, they always prefer that.
Yeah, absolutely. It has to become the core. But like you correctly mentioned, I think the other problem with this ecosystem is it's very fragmented, right?
Yes, it is.
Do you think a unified governing body could help? I think that's missing in the Indian ecosystem. Any outlook?
It is. Like when you talk about IT assets, like Pollution Control Board is a governing authority. But obviously, once you are doing that activity, you have to work with third parties, right? You have to work with the external vendors, and then how you choose those vendors is very critical. Your criteria of choosing those vendors, seeing their practices, how they are doing those activities, it can be on any front. IT is one. It can be your, as I said, packaging material, what type of material that they're using, what kind of water waste management system you are putting up in your factories, right? Or maybe what kind of energy saving devices you are using. So it applies on all. I mean, then that is a place where even a lot of startups are coming in.
Yes.
And active on this space and then providing those solutions to corporates.
Absolutely, absolutely. Completely in accord with what you said. But say if we wish to, leave, some parting thoughts with the audience here, what are the two most impending things that needs to be done in the ESG space, which you would want to leave as a takeaway for the audience here?
One key point is make this as center of your business. Don't keep it just to address your compliance things or just put it on the periphery. Make it on the center and make entire business model around it. This is a big risk. In today's time, a lot of times we see that as initially touched upon on the profitability part, this is kept on the side because this is a cost. This might involve some cost or might involve a lot of focus diversion if you just take it from outside. But once you make it a center of your business, then all your activities are driven around it and a lot of risks are taken care of.
Okay.
Right? Our risk might come back, hit you 2 years down the line, 3 years down the line. Recently we heard about some company being fined tons of money by SEC because a data was leaked out. It was not disposed of, asset was not disposed of properly. There was data on the asset which was very confidential and could not be leaked out. And then because it was not addressed properly, and then it came back and hit them 2 years, 3 years down the line. So all those practices, if that's part of your core business, right, and then the risk can be mitigated. So make it very essential part of your business.
Wonderful, wonderful. Thank you so much, Rajan. I open the floor to the audience here. Any questions anyone wants to take here? No questions? I think we are done. So a very critical two piece that Rajan mentioned, that ESG can also become very profitable, can be approached when done correctly, and it has to become the core, right? That's the essence. And I think company like HP, you're having such great initiatives. It's a wonderful, we're leading the way there. Thank you so much, Rajan, for the time today. Yeah, thank you.
Thank you so much, Mr. Rajan, for sharing your very valuable insights with us, and thank you so much, Mr. Medha, for such a wonderful moderation. I am sure that this discussion would help a lot of our startups here to be a little more responsible organization. On that note, we will part here for half an hour. We'll take a networking break, and we will see you post half an hour right back here in the ballroom. Oh, okay, so we are breaking only for 15 minutes now. I'm really sorry, keeping the track of time. And yes, do not forget to network and exchange your business cards with each other. And once again, I would like to remind all the delegates that you may now tweet live with us. You can tag us at LiveMint, at Tech Circle India, and use the hashtag MintStartupIcon2022. Thank you so much. I will see you back here in the same ballroom post 15 minutes. And after that, we will have the much awaited Mint Startup Icon Awards. Thank you. Check. A very good evening, everyone. Well, Mr. Amitabh, in his morning's keynote session, was talking about the energy that all the startups have here, which I guess he quoted, it's like almost 10 times more than the traditional businesses. So I would like to see that energy here. Good evening, everyone. That didn't do much. Good evening, everyone. Perfect. Welcome back to Mint Startup Icon Awards 2022. In October 21, we developed a platform to carry out a self-assessment nomination process. We received nominations from across the country, ranging from different sectors and industries, capturing details such as revenue and valuation. The in-house research and solutions team undertook a rigorous process of screening and evaluating these nominations, and we are now approaching the final stage of foraying startups towards heightened recognition for their innovation and positioning them as India's startup icons at this award ceremony. So ladies and gentlemen, it's time for the much awaited part of the day, the most prestigious Mint Startup Icon Awards 2022. Now to kickstart the award ceremony, I would humbly invite on the stage Mr. Shrutijit KK, Editor-in-Chief, Mint. Let's welcome him with a huge round of applause, everyone.
Good evening, ladies and gentlemen. Very warm welcome to Mint Startup Icon Awards 2022. So good to see a full hall with representation from some of our finest startups. Thank you all for joining us this evening. To my mind, what we are seeing, what we talked about during the day, the kind of extraordinary revolution that's happening among Indian startups, it's a true privilege to be witnessing this. It's an extraordinary time to live through. In terms of fundraising, the audacity of ambition, agility and innovation that we have seen in 2021 was truly extraordinary. I see it just as a sign of things to come. This evening, we are pleased to be celebrating some of the very special startups and investors. The winners were chosen through a very rigorous jury process, which my colleague Shalil will shortly explain. To honor the awardees, we have with us Mr. Amitabh Kant, CEO of Niti Aayog, who this morning gave us, during his opening keynote, a very powerful tour through India's startups journey and the startups revolution. Welcome back and thank you for joining us, Mr. Kant. A warm welcome to Dipinder Goyal, CEO of Zomato. I must especially thank him because he is here despite not being particularly in the pink of health. My colleague and H3 Media CEO, Praveen Someshwar, is here. Thank you for joining us, Praveen. A special thanks are owed also to DPIIT. DPIIT Secretary, Mr. Anurag Jain, will be joining us shortly. Joint Secretary Shruti Singh, as those of you who were here during the day would know, joined us for a very lovely session. So, a warm welcome to all of you. Many of you have come here from different parts of the country. We are so pleased to be able to host you. Thank you so much once again for joining us this evening. I hope you enjoy this evening. Thank you.
Thank you so much, Mr. Shrutijit, for giving us a very great start to this wonderful evening. Now, to take the award ceremony forward, I would humbly invite on the stage Mr. Shalil Gupta, CBO, Mosaic Digital. Let's welcome him with an applause, everyone.
Sure, thank you. Thank you, thanks a lot, thanks a lot. Good evening, everybody. There's only 2 good evenings I could hear. I think let's try once again. This should be the really nice one, guys, okay? Very good evening to everybody. Brilliant. Thank you very much. I'm going to take this ownership of explaining the BCG concept to you. I think the process being run by the BCG. Unfortunately, we could not have anybody from BCG to run through, but very quickly, in fact, the process which we went across, is this working? Okay, this should work. There's, you name the BCG and the complexity comes in, right? Okay, here we go. Can you help me with the next slide? Okay, so some of the criteria which we have chosen, the categories which we have chosen, I think there are three parts to it. One is the stage at which the startup is with us today. I think we are looking at from a high value startup, which is more than a $5 billion, to really moving to $500 million, and the 100 to $500 million, and the last we're looking $50 to $100 million. That's the stage at which the startup goes. Then we're looking at a sector specifically, and we looked at, I think, I can't get rid of the word called tech. Everywhere there is a tech, in fact, involved, in fact. But we look at Fintech, e-commerce, Healthtech, Edtech, Infra and logistics. Then we have combined few of these sectors together and said breakthrough sectors. And when we have, the last is the software as a service. I think probably there's nobody in this room who won't understand software as a service part. So that's the sectoral representation. Then we have thematic, and we said Angel Investor of the Year, VC of the Year, and the Best Woman Entrepreneur, Best Founder and a CEO. I think that's the third thematic awards which you're looking at it. We ran with the eminent jury. I think, let me just, please, if you all of us can give a big hand to the eminent jury who was part of this, ran through this process across the board. This is, the kind of people and the kind of rigor they have represented it while the jury process was on, it was amazing to see. They've gone into very detailed assessment of each of the organizations being awarded today. I think if you look at three stages, stage one was very objective in nature, assessment of the nominees on the key quantitative matrices. Around 200 nominations across all over India, we got it. Then we went to the stage two, which is a qualitative evaluation. I think the rigorous BCG and the Mint team to assess core submissions across qualitative discussions. We went across to the founders and we asked for more information if you require. After doing that assessment from 200 to 120, we reached to 50 in the last stage, which was represented to the jury, in fact. And from 50, we selected 15 winners. That's the overall stage 1 to stage 3 process we have gone through. And if you look at the next slide, there are 5 key criteria used for evaluation. One is qualifying criteria, the date of commencement, and the valuation cutoff. So we did as a cutoff there. The second was the performance matrices, valuation matrices, revenue matrices, and customer matrices. All of these 3 matrices have been taken care to actually look at each of the startups who has nominated themselves. Then the team and the board, how well tech record the team founding members and investors as well. The presence of the marquee investor into a startup, I think made a lot of sense for us to look at it. Then we have a business scalability, market size and profitability. Are they going out of global markets? Are they in the local markets? How are they performing? The size of relevant international market they can applicably do it. I think that's the pillar we look at. And the last pillar is a competitive differentiation vis-a-vis peers. So size and scale and a business sustainability. We also looked at some of the parameters on the sustainability perspective. These are the 5 broad parameters, guys, which we probably used to select the Startup Icon Awards of India, in fact. With this, thank you very much. And we hope to see all of us applauding the icons of the country. Thank you.
Thank you so much, Mr. Shalil, for taking us through the nomination process. Now, moving on to the next part of the day, the much-awaited part of the evening. So are we all excited for it? I want to know. Yes, are we excited? Yes. Perfect. All right. Well, to present our first set of awards, I would humbly invite on the stage Mr. Amitabh Kant, CEO, Niti Aayog. Let's welcome him with a huge round of applause, everyone. So our first category of award is e-commerce category, and nominations for the same are
enabled by people, processes, technology, and culture. This company democratized internet commerce. The company has helped over 13 million women start businesses with zero investment. With over 75% of its users from tier 2 cities, the platform today has close to 4 lakh sellers, and the target is to attain 100 million monthly transacting users by December 2022. The winner of Mint Startup Icon E-Commerce Award is Meesho. Congratulations!
Congratulations to you, Meesho. I would request Ms. Megha Agarwal, VP User Growth, Meesho, to kindly collect the award. A big and a hearty congratulations to you, Meesho.
Hello, everyone. I'm Megha, CXO Growth. First of all, very honored to be here. Thank you so much, Mint, for giving this opportunity, giving this stage to Meesho. Means a lot. It's a huge vote of validation of the kind of work we are doing. I'm sure most of you know what Meesho is trying to achieve. Now we are one of the largest internet, I won't say largest, but one of the largest internet commerce companies in India. The fact that it was written that more than 75% of our users are coming from tier 2 is actually higher now. And it's purely because of our focus on a value-conscious user. And if you think about India, that's really what India is. In terms of new customer acquisition, now more than 50% are people who have never, ever transacted on e-commerce before. So that's the power. And our focus has been very high on women, and most of them are actually women transactors on our platform. So thank you so much again. Thank you, sir.
Congratulations to you, and we wish you all the success for the future. All right, on that note, ladies and gentlemen, we move to our next category of the day, which is Best High Value Startup. And the nominations for the same are
With 150,000 plus partners countrywide, 5,000 plus employees across the country, 260,000 delivery executives, and 500 plus cities pan-India, this company is changing the game and delivering happiness in form of food. The latest capital infusion has nearly doubled the company's valuation to $10.7 billion, making it a decacorn. From merely serving ice cream, the company today has its roots in 3 dominant services: quick commerce grocery, pick and drop, and daily grocery delivery. The winner of Mint Startup Icon Best High Value Startup Award is Swiggy. Congratulations!
Congratulations to you, Swiggy. I would request Mr. Siddharth Bhaku, VP Business Operations, Swiggy, to kindly collect the award. Can we have a huge round of applause for Swiggy, everyone? A big and a hearty congratulations to you. You have won this prestigious award. What would you like to say?
No, I'm glad to receive this honor on behalf of the leadership and team at Swiggy. And thanks a lot, Mint, for this recognition. Thank you.
Thank you so much. Once again, many, many congratulations. With this, our next category is Best Growth Stage Startup. Can we have the nominations for the same on the screen, please?
The company in India is one of the most innovative, tech-driven companies in the dynamic digital payments market, enabling seamless payments for the next billion. It processes over 22 million transactions every day with gross value of over $5 billion a month and has a 99.95% uptime. The latest capital infusion makes the company's valuation at $460 million. The winner of Mint Startup Icon Best Growth Stage Startup Award goes to JustPay. Congratulations!
Kudos to you, JustPay. I would request Mr. Ishan Sharma, Head of Business Development, JustPay, to kindly collect the award. Check.
Thank you so much for this award. I think this award is for our team, which even now is sitting and preparing for the traffic tornado that will hit us tomorrow when IPL starts. So kudos to the team. Thank you.
Once again, many, many hearty congratulations. We have a beautiful message from the founder JustPay, Mr. Vimal Kumar. So I would request you to kindly play the message on the screen, please.
Thanks to Mint for recognizing JustPay as the best growth stage startup. All this growth is because of our tirelessly working people of JustPay and the trust our customers and partners have always provided us. A big thanks to all of them. We are a deep tech and design driven company with a lot of focus on enhancing the overall ecosystem, like working on fundamental components of UPI, the BHIM app, the Open protocol, etc. So we would like to keep continuing to do this work and reach and enhance the life of the billion people of India. Also, we ponder a lot about doing the right thing inside out. In our understanding, India's approach to Fintech is the most forward-looking globally. It's pure magic how UPI got built and it's rapidly growing. We need to take this learning next to the credit infrastructure for India, and we should take all this innovation to the global markets next. Finally, whether it's finance or technology, we should keep in mind that it is all for the people, life and long-term sustenance. We want our work to align with this simple principle. Thank you once again and have a great day.
Once again, congratulations to you, JustPay. And thank you so much, Mr. Amitabh, for joining us here. All right, on that note, ladies and gentlemen, to present the next set of awards, I would humbly request Mr. Praveen Someshwar, Chief Executive Officer, HT Media, to kindly join us up on the stage. Thank you so much, sir. Our first category is Edtech. Can we have the nominations for the Edtech on the screen, please?
Driven by innovation and the goal to build talent, it is the first company to offer live online classes. This Edtech platform has over 35 million students attending classes every month, of which 1 million attend live classes. The company has marked its presence across 10,000 cities in over 50 countries. It turned unicorn last year and plans to set global operations with an eye on IPO. The winner of Mint Startup Icon Edtech Award is Vedantu. Congratulations.
Congratulations to you, Vedantu. I would request Mr. Vamsi Krishna, CEO and co-founder Vedantu, to kindly collect the award. Let's give a huge round of applause, everyone. Sir, Mr. Vamsi, I would request you to kindly say a few words to all the delegates here. You have won this very prestigious and a wonderful award. What would you like to say?
No, thank you, Mint. Really an honor. Dedicating this award to all the teachers and the students, obviously. Right? And this is way too early. This long, long way to go. So onwards and upwards. Thanks a lot. Really appreciate it.
Thank you. Thank you so much. Once again, congratulations to you. With this, moving on to our next category, which is Fintech category. And the nominations for the same are...
Driven by successful innovation initiatives, the company is the largest stockbroker in India. Over 8 million clients place millions of orders every day through this powerful ecosystem of investment platforms, contributing over 15% of all India retail trading volumes. It's also the official member of NSE's Consultative Committee for Growing Business. The winner of Mint Startup Icon Fintech Award is Zerodha. Congratulations!
Many, many hearty congratulations to you, Zerodha. I would request Mr. Salman Qureshi, Head Sales Zerodha, to kindly collect the award. Congratulations to you, sir. I would request you to kindly say a few words.
Thank you, Mint. It's been a long journey to fulfill this vision. It's taken just over a decade. Our primary focus has always been to be true to our customers and genuinely provide them the best options that we can. And we continue to focus on the same goals going forward. Thanks.
And we wish you all the luck ahead. Once again, congratulations to you. With this, ladies and gentlemen, moving on to our next category, which is Health Tech. So can we have the nominations for the same, please?
With over 25 million patients on the health cloud, 37,000 plus providers across 1,000 locations, and 600 million plus saving generated from providers, the company is the #1 data platform for healthcare. The company has continued hyper-growth, forecasting a 5-year CAGR of more than 100% by the end of 2022, while accelerating growth across the provider, payer, and life sciences sectors. It is trusted by America's largest healthcare organizations such as Sanitas Medical Center, Banner Health, Mercy One, etc. The winner of Mint Startup Icon Healthtech Award is Innovesa. Congratulations!
Congratulations, Innovesa. I would request Mr. Ashish Dubey, Director Marketing, Innovesa, to kindly join us up on the stage to collect the award. Let's welcome him with a huge round of applause, everyone. Many, many hearty congratulations to you once again, Innovesa.
Thank you, Mint. Thank you, everyone here. It has been a long journey, but at this stage, I would really like to dedicate this award to the healthcare's frontline workers who have done so much in the last couple of years and really helped us a lot. It is for all those teams who have sacrificed so much for us, and it's really an honor to be collecting this award. Thank you, everyone.
Thank you so much. Congratulations to you once again. Thank you so much, Mr. Praveen, for joining us here. May I now humbly request Mr. Dipendra Goyal, founder and CEO Zomato, to kindly join us up on the stage to present the next set of awards. Thank you so much, sir, for joining us here. Well, our next category is Angel Investor of the Year. And this award goes to...
Our second Investor of the Year awardee is a true believer in tech-led personalization to serve the Indian retailers. He made 19 investments in other startups last year. He recently pivoted his current venture from a marketplace to a retailer model, has successfully established a network of more than 200 warehouses across 10 million square feet and raised volumes from 2,000 tons to 8,000 tons to reach 3.5 million retailers across 900 cities in the country. The Mint Startup Icon Angel Investor of the Year goes to Sujit Kumar.
Congratulations to you, Mr. Sujit Kumar, co-founder of Udan.com. Can we have a huge round of applause for him, everyone?
Thank you, Mint, but I don't call myself investor. I am an entrepreneur. So it's incidental. I believe in supporting an ecosystem. That's the hypothesis, not multiplying the money. So yeah, thank you for recognition.
Thank you so much, sir. Congratulations to you and cheers for the entrepreneurship. Well, our next category is Best Early Stage Startup, and the nominations for the same are
Driven by innovative excellence, the company is rebuilding and future-proofing India's fintech architecture. The company is completely overhauling our country's dated fintech architecture and getting it ready for the next decade of growth. The total equity funding raised by the company tops $18 million. The winner of Mint Startup Icon Awards, Best Early Stage Startup, goes to Setu. Congratulations!
Congratulations to you, Setu. I would request Mr. Sahil Kinney, co-founder and CEO Setu, to kindly join us up on the stage to collect the award. Big congratulations to you, sir. What would you like to say upon winning this wonderful award?
Thanks, everybody. Thank you so much. It's a rare pleasure, and while we don't do it for the awards, it's always nice to have someone recognize us. So thank you, team at Mint. Always a pleasure to receive it from someone who's done so much more. So thank you, Deepthi. And would like to dedicate this to people who actually spent their lives building infrastructure for India. People like Vishweshwaraya, people like Nilekani, people like E. Sridharan. We do it to serve. Hopefully the things that we build will improve the lives of people that we build it for. Thank you so much.
Thank you. And once again, congratulations. Well, next category, ladies and gentlemen, is Best Late Stage Startup. And the nominations for the same are
Contributing to competitiveness and economic mobility, this company is the leading revenue management partner for the subscription economy. The company's valuation jumps 2.5x to $3.5 billion after raking up $250 million. The company has expanded globally with new offices and investments in Australia and India and partnerships with industry leaders including GoCardless, Salesforce, HubSpot, and PayPal. The winner of Mint Startup Icon Awards Best Late Stage Startup is Charge B. Congratulations!
Congratulations to you, Charge B. I would request Mr. Ayush Agarwal, Product Manager, Charge B, to kindly join us up on the stage to collect the award. Big congratulations to you. Can we have a huge round of applause for Charge B, everyone? Congratulations to you once again. What would you like to say to all the delegates?
Thank you. It's actually a privilege and an honor to collect the award on behalf of the entire team. Thank you, Mint. Thank you, jury, for recognizing our efforts. And we actually have a small message from our CEO because he couldn't join here in person. Would love for you all to hear that. If
Sure, absolutely. So can we play the video on the screen, please?
Hello, everyone. I'm Krish Subramanian, co-founder and CEO of Charge B. It's an honor to receive this award on behalf of the team. I'm grateful to HT Media and Mint for acknowledging and recognizing Charge B as a Mint Startup Icon in the Best Late Stage Startup category. Thank you. I'm sorry I could not receive this award in person. As a business, we are building a subscription infrastructure for global businesses, and this award is a great validation of the work we are doing. I would also like to take this moment to thank our customers, partners, investors, and the ecosystem partners for believing in us and pushing us forward. And huge thanks to the team at Charge B, whose enthusiasm and faith is helping us build the next generation subscription infrastructure. Thank you.
Wow. Congratulations, Charge B. Keep shining ahead. Thank you so much, Mr. Dipender, for joining us over here. Thank you so much for gracing our event with your presence. All right, ladies and gentlemen, to present the next set of awards, I would humbly invite on the stage Mr. Satish Andhra, Managing Partner, India. Let's welcome him with a huge round of applause, everybody. Thank you so much for joining us here, sir. Well, our next category is Infra and Logistics. So can we have the nominations for the same, please?
Touching the lives of thousands in the manufacturing sector through breakthrough innovations, the company is a universal manufacturing network powered by new age technology. The company is valued at $2.7 billion with a revenue of $743 million in 2021. The company has 925 customers as of December 2021, growing by 4x from 225 customers in December 2020. The winner of Mint Startup Icon Infra and Logistics Award is Zetwork. Congratulations!
Our biggest congratulations to you, Zetwork. I would humbly request Mr. Vishal Chaudhary, co-founder Zetwork, to kindly join us up here and collect the award. Congratulations to you, sir. I would humbly request you to kindly say a few words.
Thank you, Mint, for organizing this event, and thanks to the jury members for selecting us in this category. There's a huge manufacturing revolution underway in our country. And Zetwork, 1,000 Zetworkers, and more than 10,000 MSMEs, we intend to play a very pivotal role there. We help all MSMEs improve their manufacturing capacity, access services which are otherwise not available to them, and hence in the process also provide employment to a large number of people in smaller towns in the country. So accepting this award on behalf of all Zetworkers and approximately 10,000 MSMEs who work with us. Thank you so much.
Wow. Once again, many, many congratulations to you. Thank you so much for joining us here. All right, on that note, ladies and gentlemen, we move on to our next category of the day. Our next category is Breakthrough category, and the nominations for the same are
Improving the lives of producers, businesses, and consumers in a meaningful manner. The company is India's largest fresh produce supply chain platform. The company leverages innovative tech to source fresh produce directly from farmers and delivers them to retailers and businesses across 7 cities within 12 hours. Earlier this month, the company has launched a seed fund of 25 million to back new age startups in the agriculture space. The winner of Mint Startup Icon Breakthrough Award is Ninja Cart. Congratulations!
Congratulations to you, Ninja Cart. I would humbly request Mr. Vasudevan Chinnathambi, co-founder Ninja Cart, to kindly join us up on stage and collect the award.
Thank you, Mint and the jury, for this honor. I think it's a privilege to receive it on behalf of the 1,200 ninjas who toil every day to sort of move the tomato from farm to the retailers. And I'm sure each of you here would have tasted our tomatoes sometime in the last 3-4 years. But happy to sort of receive this. I think it's sort of inspiring for us, or to motivating for us to sort of build on this multi-decade stint that we're going to play to sort of see a very different future for Indian agri. And sort of build this digital infrastructure along with multiple partners on the ecosystem. Thank you.
Congratulations to you once again. Thank you so much, Mr. Satish, for joining us here. We still have a few more awards to go, but before that, we will break here for like another 5 to 10 minutes. So till then, you can have, a good networking session. You can exchange the business cards. And please do not forget to tweet live with us. Well, yes, you can tag us at LiveMint and at Tech Circle India, and you may use the hashtag #MintStartupIcon2022. We will resume our awards ceremony in another 5 to 10 minutes with our next set of awards. Thank you. Please be here with us. Check. Requesting all the delegates present outside in the lobby to kindly join us back in the ballroom so that we can resume with our awards ceremony. I request everyone to kindly join us back in the ballroom so that we can resume our awards ceremony. Thank you. You're having a good time here. I hope that you enjoyed all the knowledge that was being trickled down here in our initial part of the day, that is our summit. Perfect. We will soon resume with our awards ceremony. I would request everyone, all the delegates present outside, to kindly join us back and have their seats. Back, everyone. We welcome our very distinguished guest, Mr. Anurag Jain, Secretary, Department for Promotion of Industry and Internal Trade. I would humbly request Mr. Anurag to kindly join us up on the stage and address the gathering. Let's welcome him with a huge round of applause, everybody. I may humbly invite Mr. Anurag Jain, Secretary, DPIIT, to kindly join us up on the stage and address the gathering. Let's welcome him with a huge round of applause, everyone.
Good evening. Praveer ji, Shujit ji, and all the young guns here sitting. As per what we had spoken earlier, I was not supposed to make any speech. I had said I want to come here to listen to the young guns of the country. I must compliment all of you. You are doing such a fabulous job, which makes us proud. Within a small time of 5 years, we have become the third largest startup ecosystem in the world. Of course, whatever government did, facilitative role, or maybe absence of role, absence of regulation, whatever way you can put it. But startup has taken roots because of young and dynamic minds of the country. And HT and Mint doing this facilitation program is basically a recognition of your talent, your hard work, and your success. And since as Secretary DPIIT, it is my responsibility and duty to encourage all such events. So therefore I agreed to come in. I said I'm not really interested in making any speeches. I'm not interested in giving away prizes. Of course, if that is something which helps people to be encouraged, I'm okay with that. But my main purpose is to listen to you. So that's why I had actually requested for a separate interaction session with the winners, what they have to tell the government as a feedback, what we should be doing more to support you. As far as my personal thoughts are concerned, we are also working on a Vision 2047 under the dynamic leadership of our Honorable Prime Minister. He always starts thinking much ahead of times. So right now, as a group, we are working on that. So one of the important points I make in all these meetings, that a startup is the future wealth creator of the country. If we want to become rich, we need to encourage a startup ecosystem because they are the real wealth creators. Manufacturing is important, all the changes which are taking place, technology, industry 4.0, all those things we have to work on. But as a system, we need to. And therefore, continuously, as all of you are aware, last 5 years, the scenario has completely changed. With the startup initiative, which started in 2016. This year also, during the budget discussions, we got some good inputs from the startup community. We actually engage with people all around. And as a result, certain good things happened in the budget also. I'm sure all of you would have been following that extension by 1 year for the startup, LTC changes, equity changes, and then the whole ecosystem about agriculture, startups, drones, and all those things. So I'm sure you follow, I need not tell you that. But as a policy, we are very clear, startup is something which we are looking not only as a wealth creator, we are also looking as a system to provide solutions to India's social problems. And I'm sure you are attempting and doing those things. I think I'll stop with that. I'll rather like to listen whatever feedback you people want to give to us for making our policies better. We have also tried to streamline certain things, like this year we had a Startup Day declaration on 16th of January, and it's a week-long program. And now that has become an annual thing in the calendar, and every year it will be in the National Startup Awards and the whole thing, the whole cycle has been streamlined. So I'm sure many of you, when I was going through the list, some of you have actually won the National Startup Awards in your earlier part of the journey. Here you have become much bigger when you have got the recognition by the Mint. So the government recognizes you at the infancy stage, which I hope we'll be able to together do, because I was just having a small chat. Some of you are doing very well in supporting the new startups, and that should be the spirit. Once you have got it from the country, you should help invest it back into the country with your younger generation. Thank you.
Humbly requesting you to kindly stay back for the awards. And here's a very special announcement and a request to all the delegates that you may join Mr. Anurag for a interactive session later in the Speakers Lounge. On that note, we will move on to our next set of awards. And our next award is for Best Woman Entrepreneur. And the nominations for the same are
She took the entrepreneurial plunge in 2012 when she was pushing 50 with about 20 years of experience as an investment banker. Nearly a decade on, she has listed her startup at a valuation higher than those with some of the biggest legacy businesses in India. Her company today claims 64% of its revenue from Tier 2 and Tier 3 cities. Her vision to build an omni-channel business model and diversification has made her the wealthiest new entrant in the Hurun Global Rich List 2022. The Mint Startup Icon Woman Entrepreneur Award goes to Falguni Nair. Congratulations!
Our biggest congratulations to you, Ms. Falguni Nair. On behalf of her, I would request Mr. Lalit Pruthi, Vice President Finance, NICA, to kindly join us up on the stage to collect the award. Requesting you to kindly say a few words on her behalf.
So while Falguni couldn't make it, she's traveling out of the country. So on her behalf, thanks to Mint and to HT for the validation. She has been and is actually an inspiration not only to all of us back at NICA, but to all the women entrepreneurs out there. Thanks again for the validation.
Thank you so much. And once again, congratulations to her. With this, ladies and gentlemen, we move on to our next category, which is VC of the Year. And the nominations for the same are
In the vast majority of its backings, this VC is the first institutional investor in a startup. Some of the firm's top-performing startups put together have exceeded $100 billion in valuation. The total commitments from this VC in the region has now crossed $2 billion. This VC also happens to be backing 5 startup winners of today's evening. The Mint Startup Icon VC of the Year award goes to Excel India Management. Congratulations!
Congratulations to you, Excel India Management. I would request Vice President, Excel India Management, Ms. Radhika Anand, to kindly join us up on stage to collect the award. Let's welcome her with a huge round of applause, everyone. Once again, big and a hearty congratulations to you, Excel India. Ma'am, I would request you to kindly say a few words.
My heartfelt thank you to Mint and the jury for recognizing Excel and for the work that we've done in the ecosystem. It's been quite a journey that we've been on from the time India's internet usage was just about beginning to today, where digital economy is being spoken about in the same breath of our country's GDP. And in all this time, our culture and philosophy hasn't changed. We continue to back our founders from their formative stages supporting them through their ups and downs, and winning their trust. And this trust that goes both ways is what makes Accel very special and one of the top funds in the country. On behalf of my partners, my peers and colleagues, I'm honored to receive this award. Thank you very much. And I also dedicate this award to our founders. Thank you.
Thank you so much. Once again, many, many hearty congratulations to you. All right, with this, ladies and gentlemen, we move on to our next, last but not the least, Angel Investor of the Year. And the nominations for the same are...
Long before he became an investor, he founded a company to bring couples together. He has invested in over 224 startups. Many of them were in his portfolio long before they became unicorns. He's also invested in many Bollywood films, and just last year, he was one of the judges of Indian Shark Tank. The Mint Startup Icon, Angel Investor of the Year goes to Anupam Mittal. Congratulations!
Congratulations to you, Mr. Anupam Mittal. I would humbly request Ms. Deepika Bharti, Head Service Operations, to kindly join us up on stage and collect the award on his behalf. I would request you to kindly say a few words on his behalf.
Thank you, Mint, for this honor on behalf of the leadership team. And we have a video message from our CEO. If you could please play that. Thank you so much once again.
Sure. Thank you so much. Can we have the video on the screen, please?
Hi, everyone. Namaskar. When I started angel investing over 10 years back, I think the early stage volume or the early stage value in this country was a little over $50 million a year. And last year we hit more than $5 billion, which is a growth of 100x in a little over 10 years. So that's been unprecedented. And I think that's been possible just because of the latent talent and the hunger that our people have. And I believe that just like we became the top doctors and engineers in the world, we will emerge as the top entrepreneurs in the world as well. And so I call it India's entrepreneurial decade. So I want to thank Mint for recognizing entrepreneurship and celebrating entrepreneurship and instituting these awards, and particularly the jury for choosing me. Thank you very much. And I humbly accept the award on behalf of the incredible people, entrepreneurs, and employees who work in these companies, without whom, frankly, we wouldn't have any place to invest in. So thank you guys, all the best.
Thank you so much. Congratulations once again. I would humbly request Ms. Deepika to kindly stay back on the stage. And may I now invite all the winners on the stage for a group picture. Along with them, I would humbly request Mr. Shalil Gupta to kindly join us up on stage. Mr. Shrutijit KK to kindly join us over here. And Mr. Praveen Someshwar, CEO HT Media, to kindly join us up on the stage. And all the winners, I would request to kindly join us up here. Requesting all the winners, along with their awards, to kindly join us up on the stage. It's time to create some memories which we will cherish later. So let's take a group picture and let's invite all the winners up on the stage. You all are doing a spectacular job, and you all are making India proud. Can we give a huge round of applause for all of them? Come on, everybody. For all the success and all the achievements. And now 3 cheers for everyone, because since we all are the champions here, hip hip, hip hip, hip hip. Perfect. Thank you so much for joining us over here. Thank you so much, Mr. Anurag, for gracing our event with your presence. May I now humbly invite Mr. Shalil Gupta, CBO, Mosaic Digital, to kindly deliver the vote of thanks.
Good, thank you guys, thank you very much. I have got 140 slides to present again. Are you guys ready? I think the only thing which is left is to, first of all, congratulate all the winners. Thank you very much for being with us, and many, many congratulations for winning the Mint Startup Icon Awards. I would also like to thank our partners here today, because of which this platform was able to create, and we were able to recognize the startups. I want my team to really stand up there. Can we have your team in the background, guys? Can I very humbly request to please give them a big hand as well? All of this happened because in the background, they were actually working to create the experience for you. So thank you very much for that. And guys, all of you guys, I would like to see you as icons. I would like to see you again and again, and your gracious presence, giving us the time from your busy schedule. Being a Friday evening, I won't stop you for the bar now, but please give yourself a big hand, and from my side, a very big hand to all of you guys. Thank you very, very much. And with this, please, I request you to please head towards the drinks and dinner.